Yeah, but we won really big. Yes,
I know you did.
The Saints could come out. You're right. Look, you're right.
Russell.
The Saints look good.
But I wondered how the hell you got out there, because so you overnight.
A Philadelphia Red Eye.
Philadelphia
Red Eye. I got there.
Yeah.
Both. Can I just ask Walters? Walter, I got a quick question. You know, my daughter graduated from Tulane. How about the Renaissance of Tulane? How about how great and exciting that school is?
It was partly started when your daughter entered Tulane. We have a chart showing the great students who came, great professors, and she was a leading indicator. Tulane's great. Tulane's even winning in football, which is really weird. But,
wasn't that something? They just almost won this weekend.
Almost won this weekend. I think what's happening at Tulane and a lot of other universities is it's really connected to a community, and people just, like being able to be in a creative place like New Orleans, and I know your daughter loved it.
She goes back constantly, and a lot of it is people like you have just come down and embraced the place. It's worth it to talk about new schools.
Wait a second.
I will. I was just thinking, this is not as much fun, is there?
You can sit on the balcony with Kathy and me and listen to the bands come by.
This is a cheap offer. Right? You just offered that
the music, the food.
And we're having
You already told me.
Yeah, we're having Joe too, so watch it. Yeah.
We get along, Jim.
We'll all go down.
Both like the market.
But your show, I just love the show this morning. It's just been a lot of fun.
Thank you, Jim. Appreciate it. Good to see you. And we should tell everybody, you don't want to miss an exclusive interview with Snap CEO Evan Spiegel coming up a little later this morning on Squawk on the Street. You can catch that at 10 a.m. Eastern Time. And we should also tell you that Jim's got a huge lineup of guests out in the Valley this week.
We'll start this.
Cold Monday afternoons like this are cruel. You cough, you splutter, so does your car. Its battery dead, killed by an icy claw. Will anyone stand up to winter? Yes, you. Come to Halfords. We fit new batteries on the spot from just £15, and we're open late 7 days a week. See halfords.com for opening hours. Here in Wandsworth. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
Final check on the markets right now. We have turned in the red. We were in the green a little bit earlier. Dow off about 14 points. NASDAQ looking to open down about 6 points. S&P 500 off about 3 points. And we need to thank the one and only Walter
It's great to be with both of you. And I'm sitting in Becky's seat.
We moved you.
It's just like amazing.
And we've had a ball with you. So come on back.
Between us.
I come whenever you invite me. In fact, I keep inviting Joe down.
I'm coming down.
We're going to do a show from down there. That's a
good idea.
Okay, make sure you join us tomorrow. Squawk on the Street begins right now.
On the street, I'm Carl Quintanilla with David Faber at the New York Stock Exchange. Kramer is at one market in San Francisco as Dreamforce is set to begin. Full coverage from Jim all week long. Stocks were aiming for fresh records this morning, but they've been pulled south from a tweet from our Eunice Yoon saying China is now pessimistic about a trade deal and that their strategy is now to, quote, talk and wait. Europe is mostly red, 10-year 182. Our roadmap this morning begins with the record run for stocks. Dow is set to try to climb above 28K at the open. S&P in the midst of its biggest, longest rally in 2 years.
Plus an executive shakeup at T-Mobile. As I've been reporting for months now, John Ledger is officially set to step down as CEO. It'll be next year. The shares are moving lower ahead of the open.
And FedEx versus the New York Times. CEO Fred Smith challenging the paper's publisher to a debate after its expose alleging the shipping giant paid no taxes in 2018.
And coming up next hour, it's an interview you won't want to miss. Snap CEO Evan Spiegel will join us exclusively.
Let's start with Jim and his big week in San Francisco. Jim, the guys on Squawk were just asking you how you got out there so quickly after the Eagles game last night.
Well, Philadelphia, too, has red eyes, and my eyes are red from crying because we had a chance to be able to really seal our fate, and we sold it already in the wrong way. But, you know, look, you want to come out here during Dreamforce because anybody does come out, and I think that the star of this quarter, as we heard from Mike Santoli, is tech. So we got to hope that momentum continues. In the meantime, the most important tech story is the tech story that David owns, because what it does say is there is a need for the companies in the no growth mode to get together in order to be able to have any earnings per share growth.
We have seen actually a bunch of macro desks this morning and over the weekend, Jim. JP Morgan Asset Management, certainly Morgan Stanley's the more notable one, saying we're going to raise our base case 10% for year-end 2020. We don't think that changes the trajectory of earnings growth, and we think the Fed is truly on hold. As they said over the weekend, we are on our own when it comes to interest rate cuts. But I wonder if you think can we call this capitulation at all?
Yes, that's exactly what it is, because people recognize at these big firms that there isn't anything that's going to derail unless we have Powell, right? Remember, Powell really crushed us from October till December. But it seems like everybody's kind of just said, listen, don't do anything important. Let things ride. The research this morning is really indicative of just hold your stocks. You'll be fine. The research is a little too benign. I think that Eunice Yoon's tweet has more to say than anything that we can possibly put together this morning.
We're going to try to get Eunice on TV later on.
As we should. That is certainly an important bit of news she's sharing in terms of her sources, government sources telling her again, just to reiterate that there's no tariff rollback is becoming a real issue for the Chinese. I guess Eunice will be or is available right now.
I think we got her now. Eunice, your tweet did move the pre-market, and then you go on to talk about how, in addition to sort of talking and waiting, maybe this reverse repo rate cut that first we've gotten in 4 years, they're going to continue to manage stimulus at the margin.
Yeah, that's right. The focus now appears to be on making sure they're able to support the domestic economy. But in terms of what this government source had told me, who's familiar with the trade talks, he had said that the Chinese are feeling that it might not be possible to do a deal with President Trump, that recently there were some remarks that he made that really soured the mood within the government. First of all, he said that about a week ago, President Trump had said that phasing out the tariffs might not be part of an agreement. That was very troubling for them because he said that on the Chinese side, they felt that there was an agreement, at least in principle, to have a phase out of tariffs. Also, he mentioned that there were there were still disagreements over some of the basic points within a phase one deal. He said that, for example, the specific targets, the U.S., as you guys know, wants to have a commitment of $40 to $50 billion worth of agricultural purchases. But he said that the Chinese don't want to be pinned down with that kind of number, and also have been getting a lot of complaints from trading partners. So he said that the Chinese don't want to alienate those trading partners. And then finally, he said that another thing that the Beijing people in Beijing are watching is the political environment in the United States. And that one of the reasons why they're thinking of waiting and watching more is because of the possible impeachment of the president, of the election that's only a year away. And so with all of that as a backdrop, they're feeling that it might be better just to hold things off and instead focus on supporting economic growth here.
Eunice, don't go too far. Jim, it does sort of dovetail with what Kudlow said over the weekend, and that is that a Phase 1 deal theoretically might not have to be signed by President Trump and Xi. Could be signed at the ministerial level.
Yeah, look, the idea of them Chinese waiting, I think, is at odds with what they must do for their economy. It means that the mid-December tariffs are going to go up. What I get, it's very rare to find a company of any sort that has done big business in China that isn't trying to pull out as fast as possible. So I know that we always seem to think that the Chinese are all powerful, but the longer that Trump delays tariffs, the more time they have to be able to get out of China. And there's even Foxconn talking about getting out. They have a huge number of plants there, Taiwanese company. So I don't know what the Chinese think that they're going to get if they wait. I think the Chinese must recognize that the impeachment is unlikely in the Senate to be found guilty. And that I don't know if they're reading any of the things that we're getting from Elizabeth Warren, some of her tweets this morning. Elizabeth Warren's very hard line on China, so they may actually feel that they can wait. I think that they're making a huge mistake, because when those tariffs go up, it is going to be another clarion call to get the hell out of China.
We're going to watch that, obviously. Jim, in the meantime, we're getting a little more extension on some Huawei licenses, more discussion about whether we truly delay EU auto tariffs. A big part of the discussion this morning is, if you are a CapEx manager, are these incremental delays enough to give you confidence to spend?
Well, look, I think that Chuck Robbins talked about how Cisco didn't have it, that the enterprise is shaking here. But we also have a lot of Salesforce kind of, let's say, software companies not seeing any slowdown there. There was a Workday downgrade by Morgan Stanley, but I still think our companies are in pretty good shape. And given the fact that we're in retail earnings, I think even 6 months ago, we would have felt that their earnings were going to be compressed. Margins were going to go down because of the tariffs. It hasn't happened. There we have a Matthew Boss upgrading Five Below. There was a time Five Below sources 25% from China, but they haven't been hurt. I keep looking for retailers that have been hurt. I know that some of the companies that go and do a lot of business with Huawei have been hurt, but it's been very minimal. Been very minimal.
Interesting. Speaking of Huawei into wireless, into a important announcement this morning, guys, from T-Mobile. Although I hope not a surprise for our viewers, because I've certainly been talking about it for months now, given how many people close to this company have been indicating that John Ledger was going to step down as the company CEO to be replaced by Mike Sievert, who's currently the president of the company. They've made it official, however, this morning. And for those perhaps who hadn't been following it as closely as others, it may be something of a surprise, though. May 1st will be, or April 30th will be the last day that John Ledger, the highly successful and longtime CEO of T-Mobile, holds that job. He will be replaced by Mr. Sievert as the company's CEO. Sievert's new title will be President and CEO. Ledger will remain, by the way, on the board of directors, but he will be free beyond that, of course, to pursue whatever it is he wants to. There'd been some talk, I've been reporting on it as well, of his at least interviewing for the job, top job at WeWork. Very much unclear whether that would actually happen. And they've been looking at a lot of candidates there. But again, this was not unexpected. In reporting as closely as I was on the conversations that went on for quite some time between T-Mobile and the Department of Justice to try to iron out that consent decree that they finally agreed to, many people around that had made it clear that Mr. Sievert was deeply involved in those conversations. They were very impressed with him, by the way, as well. And that they had all come away under the full impression that he was going to be taking over. And so this has been something they've been thinking about and talking about and planning for quite some time. Ledger's contract does expire at the end of April as well. And Jim, I've been trying to get people not focused on this, but focused on what really is the most important thing, which is the beginning of the trial, where the state AGs who oppose the transaction are going to have the chance to present their case. And that begins December 9th, right here in New York. The star witness, as I pointed out as well, is going to be Charlie Ergen, who they're going to be coming out saying, are you really going to represent a significant player in the wireless market in 5G and therefore a real fourth competitor? And obviously have a lot of questions about that. It should be very interesting. But that's the key here. Mr. Ledger's leadership certainly has been incredibly important, but I think many shareholders already were under the anticipation that he would not be here once this deal is either completed or not. Let's call it next spring into next summer.
What I'm finding is that a lot of the component companies that do business with Huawei have made it so that because of the strictures, that Huawei fell behind. I mean, I think that this was something that people didn't feel possible. There are so many companies, American companies, that are embedded in 5G. Whether it be everybody, you know, Qualcomm that's involved, Micron's involved, Marvell Tech's involved, and they've all been held back. I just think that if an American company wants to advance and do a lot with 5G, we know that Verizon's there talking, we know that AT&T's there talking. But David, this is the company that they are positioning themselves as being the leader in 5G if you just let them get together. And I don't know how the balance sheet's so bad, but I've got to admit that Ledger's been a great spokesman for the team. I don't know. I don't know where they really are in 5G. I don't know.
Well, they will have a great spectrum position, given Sprint's in particular spectrum is particularly good for that mid-band range that really is helpful in terms of 5G. It will require, as you say, a great deal of capital. By the way, that comes back to the argument when there are those who say Mr. Ergen's efforts are not as robust as they otherwise should be, because he's talking about trying to do it with $10, $11 billion. Many say that's just a drop in the bucket for what you really need in terms of actually creating a 5G nationwide network. Now, there will be more beyond that, but that's the number he's been sort of pointing to, at least in his public comments when I've seen him at the Goldman Sachs conference or at a couple of other places of late. We'll see. But the key is going to be December 9th. What happens to the deal itself? And remember, if in fact that deal is opposed, there's no extension of the merger agreement at this point. So while they are fully committed to it, and they just said so on the conference call just moments ago, T-Mobile, in terms of the Sprint deal, they can pull out at virtually any time. And that's got to be a key question for people. So we'll see how the trial goes when it begins 3 or so weeks from now and what happens. A lot of ramifications from it. The future of Dish, the future of Sprint being two of the key ones.
David, who is Sievert? Because we know who Ledger is. Ledger's a guy who actually rallied the rank and file. I mean, he's regarded as being a modern leader of our times. Sievert, is he following in the footsteps?
He is. I mean, he was hired in 2012. And in fact, Ledger says, I hired him and I've mentored him as he took on increasingly broad responsibilities. He's well prepared, they say, to lead the company into the future. Has a deep understanding of where it's been, where it needs to go. I will tell you separately from the reading from a press release quote here from Ledger that, again, the people that I spoke to who were involved in those key negotiations said he was, in their opinion, very strong in terms of his understanding of what needed to get done and making it happen.
Well, I mean, right now, John Ledger's telling us, David, I don't know if you got that tweet, that he's talking about analysts right now. I mean, he kind of is a close follower, maybe a little closer than we are, of what we're saying. Very excited. Obviously, if it's his guy, he's happy to tweet to us. David, check your direct message. It's pretty positive.
I will. I know. That's how we communicate with John. Not that he ever tells us anything. But I did go back at him the last time, didn't I, Jim? And I said, I know you're getting replaced. When are you going to announce it? He didn't respond.
Well, I mean, you knew Sievert. You knew Sievert when Sievert was just when Sievert was just a glint in his mother and father's eyes. You nailed Sievert. But I look at our direct message. It looks like John's still running the meeting, and he's not on a Peloton. And maybe he hung his jacket on a Peloton. Peloton's been coming back. We'll have to check.
Now, people have been joking about Twitter's engagement, overall engagement, if in fact John is less active, because it gets meta with John on Twitter. You're reading it right now, aren't you, David?
Yes, I am. I'm taking a look. I was told by Mr. Kramer to check my direct messages, and I'm doing so.
When we come back, David's got the latest on HP rejecting that takeover bid from Xerox. And then, as you know, Snap CEO Evan Spiegel's with us today. We're going to talk with him later on this morning. Shares of Snap have more than doubled this year. We'll get Kramer's Mad Dash. We'll get to Federal Express, FedEx, Ford. There's news on Workday and Philip Morris. A lot more as Squawk on the Street continues.
This CNBC...
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Batteries running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The world is a noisy place, but whether I'm here or here, my phone calls are always loud and clear on my Doro 6620. Hi, love. Yes, I can hear you perfectly. I'm 10 minutes away. Get your Doro 6620 from Amazon, Tesco, and O2 today.
Hi, Susan. What's a Brew City Brew Bite?
It's Beer Munch.
Oh, all right, but what exactly is it?
It's Beer Munch.
Okay. But what about a Brew City Halloumi Fry?
It's Beer Munch.
And an onion straw?
It's Beer Munch.
Yeah, it's Beer Munch. Yeah, so you keep saying. Hot, shareable snacks. They're delicious with a cold beer and friends. You'll find them in the freezer aisle. Brew City.
It's Beer Munch.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 refresh credit by Telefonica UK Limited. Contract eligibility and terms apply.
12 minutes to go before we get started here with trading for the week. But let's get a mad dash. Cross country it is this time. AMD is the name, Jim.
Something, David, that really just strikes me as being, talking about All-Star. Do you know that Cowen this morning says after a meeting with Lisa Su, after meeting with the CEO, they're confident and they've got to raise their price targets. They have nothing else on it. They're going from 40 to 47. It's just that Lisa Su is so impressive. Now, last week, we had a quarter from NVIDIA. I happen to like the NVIDIA call, but a lot of people are saying AMD is ahead of NVIDIA when it comes to gaming. Lisa Su will be on the show on Thursday. Look at the stock, David. It's up 130% this year. How many of those do you have?
I don't have many. Well, I'm not allowed to own stocks other than Comcast, which is up about 33%, which we're not complaining about.
That's just... I know this is about you. It was kind of a rhetorical question.
Oh, okay. I thought I'd answer it.
Yeah, no, I'm so glad that you were so granular. But I just like the fact that AMD reported in the last quarter that people didn't really care for her. And just because Lisa Su is such an MVP player, you know what? Brady didn't have a good game. I think she's better than Brady.
Yeah.
She's better than
well,
Brady.
He was throwing the ball all over the place and not necessarily
she's
near.
a little bit
What,
like
he had
Mahomes.
14 incompletions in the first half. That was the most he'd ever had, I think, in his career.
That's why we need Lisa. That's why we need Lisa Sue. She can do anything, David. Anything.
Really? She can throw a 40-yard pass on a dime right to the sideline? She can do that?
Yeah. On her back heel, going full, right out in the end zone. David, Queen's zone. You know what? She plays, I'd say, at a level that we've not seen a Silicon Valley exec, other than, yes, Jensen Huang, who a lot of people feel that she's doing a better job at. I disagree. Right. I think they're 6 or 8 dozen.
Yeah, no, Jensen Huang can throw from all those different angles, kind of like Mahomes. He's known for that.
Jensen Huang can run it in. We'll see him tonight.
Yeah. By the way, Jim, you're going to want to stay tuned because we have an exclusive interview coming. Evan Spiegel, Snap CEO. More Squawk in the Street straight ahead. We'll count you down to the
Get a
opening bell.
selfie. Get a selfie.
It was Sophie's big day.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion. Was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status. Phase policy applies. See tescomobile.com/terms.
Big week on tap as we'll get some flash PMIs on Friday. Obviously, October end earnings all week long. Some minutes from the Fed and the ECB on Wednesday. For the time being, though, China trade has futures slightly down. Opening bell in 7 minutes.
Get the edge on a hot investing trend. ETFs.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes NI.
Hey there, if you've got a flawlessly powdered nose for a bargain, there's 15% off fragrance and premium beauty at Boots, including Clarins Double Serum, which was £78, now £66.30. So gift like you get them at the What to Buy Someone Worth Pushing the Boat Out for, but not too far boutique. Offer ends 17th of November at selected stores and 18th of November at Boots.com.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off the Carson, slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday Night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
On the goal line, scores! It takes it home! Hockey fans, the 2019-20 NHL season is here. Here's Pietrangelo, he scores! And you can hear the action live on TuneIn Premium. Move, and a shot, they score! From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell in 4 minutes on this busy Monday as we watch China trade, obviously, more violence in Hong Kong. FedEx is the other big story, firing back against the Times piece over the weekend about the company's tax bill. Fred Smith challenging the paper's publisher to a debate after its tax expose about the shipping giant. The paper says between 2017 and 2018, they managed to cut their tax bill from $1.5 billion to zero, as its effective tax rate dropped from 34 to less than zero. The Times says this came after FedEx and its CEO lobbied hard for the tax cuts. In a statement last night, Smith called the report distorted and factually incorrect, and then challenged the publisher and the business editor of the Times to that public debate. The Times has yet to respond to Smith's challenge. Bigger part of the story, David, was how the correlation between tax benefits and CapEx spending really hard to find.
Agreed. I mean, I think, again, and there's a quote from Mr. Smith responding to that in terms of challenging A.G. Sulzberger to a debate. And yeah, on that, in terms of FedEx's tax bill, particularly as it had the impact it had for so many others, the tax act itself of minimizing their future liability. Not completely clear how the Times came to their numbers, but Carl, I agree with you. The larger takeaway, cited in a number of different places in the story, was simply that rates are lower than had been anticipated even under the tax bill, and that the expected benefit in terms of capital investment has not really been there. We all know that we're facing trillion-dollar deficits, in part as a result of that tax bill itself, Jim. And the question is, was it really worth it, given we don't seem to have seen an appreciable increase in capital investment over time?
Well, look, I think the issue here is the 6 million shares that he bought back, which is something that people were saying over and over again. The critics of this they're just going to buy back stock. They're not going to do anything. You know what's funny, David? I think that FedEx underinvested during this period. We had David Abney on from United Parcel. He spent a fortune, and a lot of people feel that FedEx is not ready. The problem with FedEx was that it made such a big commitment to China, and if China had not had such had not become pariah, I think that Fred Smith would have spent more. But that was his business. He was building up China and building up the hub here. I don't know whether he feels that a bang for the buck was going to happen. If you were to open China, the guy was ready. But, gee, 6 million shares, I don't know we should really fault him that much. That's not that big a buyback over a 2-year period.
No, but I couldn't help thinking as I read the story, Carl, that the Times failed to point out the stock has been terrible, as we know. And that despite their efforts to get their tax rate as low as possible, and obviously being a champion of the Tax Reduction Act for corporate America, it didn't really help them at all. I mean, we've sat here and done, right, Jim, for the last quite some time, certainly after the last earnings report, is talk about, as you said, potentially underinvestment, losing out to UPS, which made the investment that they needed to.
It's a dog. I mean, I think that look, Fred Smith is a great economist. I met Fred through Larry Kudlow and Kramer. He was a regular guest. But I think FedEx is kind of caught here. They were developing this great international presence, and suddenly China's been shut down. And plus, they're also going to be hurt by Brexit. They don't really know. When you go over to Britain, there's signs all over the place. We don't really know how much the tariff's going to be. So FedEx is a little more caught than United Parcel, which I think is very, very ready for the holiday season.
Let's get the opening bell on the S&P 500 at the CNBC Real-Time Exchange with the big board of Sister Lael Materials Handling, maker of lift trucks at the NASDAQ, Fortinet, provider of cybersecurity solutions. Jim, talking about policy and its impact on corporate America, a lot of discussion over the weekend about Elizabeth Warren. Some say sort of retrenching a bit on her Medicare for All. Obama telling Democrats not to give in to the far left wing of the party. Does this mean that healthcare stocks have a reason to run?
Absolutely. I think the managed care stocks, you thought that they went up because if you look at the timing of when Elizabeth Warren put out her plan versus when Trump started talking about more transparency. Transparency didn't really do anything for the managed care. But when her statement came out that she would delay anything for 3 years, that was the clarion call that she's not as left as you thought. And that's what drove Humana, which has been the bellwether. That's what drove, it drove every single one of these. But United Health, which had taken a shot at the Democratic Party, that stock would not quit. So a softer Elizabeth Warren is something we're going to have to start expecting. I was shocked that she did this. She is the single payer option. It was amazing.
UNH is the best Dow component. You got Buttigieg running number 1 in Iowa. Cover of the Des Moines Register over the weekend. Standing on top of a hill as Warren and the others are trying to climb it. So, I don't know. It's a lot of
she's back to levels that she saw a few months ago. I know Biden has also lost support as Buttigieg has gained support in Iowa. Again, we've made this point. There's still a lot of time to come, even before the Iowa caucuses, let alone so many other things. And when we've looked at previous nominating processes, many of the people in low single digits at this point ended up being in a much different position later on, didn't they, Jim?
But David, can I just challenge something that you've been saying?
Sure.
As we get closer, aren't we closer? I mean, you've been saying all along that we are far from it. I feel that we are getting closer. It's just something that happens with the count. You can disagree. I am happy to say that. But now we are.
I think there's a day, Jim, where you're no longer far and you're close. That day hasn't come yet. I don't know where it is.
You, even from out in California, David, you have horse sense.
Isn't it incredible? I know. It's just amazing.
I don't know where it comes from.
As I like to say.
It's all about, David, it's all about TikTok. Yes, you do.
By the way,
all about
who was the
TikTok.
first person to tell you about TikTok? Who was it?
The same person who told me about who's going to replace John Ledger.
That's right. That's right. I remember it was the only
John
thing
Ledger
I ever said to you. You're like, what's TikTok? It's like TikTok.
I know. I thought it was Tic Tac. I had eaten a Tic Tac off the floor of a Lamborghini factory. David, I want to ask you, did John Ledger learn from you that he's going to be replaced?
I was looking back. I think I did it on the 19th of, 4 months ago. Oh, look, somebody actually tweeted it. Thank you, Brandon. And you turned to me then and said, what? But now it's official. John Ledger does, the company announces this morning, his last day will be April 30th as CEO. He will be succeeded by Mike Sievert, the company's current president. Not a surprise for many, of course. Here's what Ledger had to say in terms of, even more importantly, what it means for and where things stand in terms of the long process of trying to get that acquisition of Sprint over the finish line.
I feel quite good that we have the basis for settling this deal, and I feel equally as good, if not better, on our ability to win this case in a trial. So we're certainly in a very good spot.
Interesting that he raised the possibility of settling this deal. Again, remember, less than a month from now, the state AGs in opposition to the merger of Sprint and T-Mobile will go to court to challenge that deal on antitrust grounds, saying it's anti-competitive. Interesting, Jim, he brought up this idea of a basis for settling. That would be obviously seen as a real positive by the market.
Yeah, look, this is something that if you look at the arc of what happened, when it was first proposed, I know I laughed. I laughed because could 5G be that important? At this point, I think that whoever can help us in 5G is going to get a leg up from the feds because there is such the antipathy toward China in 5G cannot be underestimated. There are 3 other companies in China that I think are now ahead of Huawei. And are regarded as being less owned by the government. By the way, David, I just want to point out, I don't know if you've seen how Hong Kong, that they couldn't even get the JP Morgan conference roadshow on the Alibaba deal. They're saying, obviously, that, look, don't worry about it. It's because people know it. I understand that the protesters didn't want it to happen.
It's significant, no doubt about that. Again, from me here to saying something but in terms of what's going to happen and what the impact is there in Hong Kong, no doubt.
Do we talk about it enough?
The story this morning is from Eunice Yoon, as you know, Jim, our own Eunice Yoon. I mean, the S&P is only down 0.16. We've been talking in recent sessions about is the market taking into account the possibility we won't see phase 1 signed in the near term. But there seems to be this stubborn optimism that, in fact, we'll get there, regardless of what we may be hearing from the Chinese side or not.
Well, I think that Larry Kudlow is the person who is the stubborn optimist. The other wing, David, in the White House is saying, listen, we could have a deal, but the Chinese have to move first. And it does revolve around pork. I know that people think that that's soporific and just insane, actually. But if the Chinese don't order the pork first, then I've got to tell you, we're not going to have a deal. And the retailers are going to be deeply affected because people are going to realize that the 4th round of tariffs are coming. Watch Macy's reports this week. They're regarded as being the company that is the least, way to be able to get around the tariffs, that they could be hurt the most. So we want to watch that. I wish that I knew which way it would go, but if the Chinese don't buy the pork, they don't buy the bacon, they're not going to bring home the bacon.
We're going to get a lot of October end earnings, Jim, as we look for some follow-through from the Walmart numbers from last week. We'll get a better sense of how the consumer's been doing on a more rounded basis. Ford's the other big story, Jim. I'm sure we'll talk to Phil LeBeau later this morning, but the Mustang Mach-E, their first all-electric SUV, pretty good range, up to 300 miles, depending on the configuration. And we're going to be hearing a lot more from the other big 3 automakers regarding electric in the next couple of years.
It is amazing how much Ford has to spend and whether their balance sheet can handle it. They've sworn over and over again about the dividend. The amount of money that they have to put in for any EV cars are incredible. These guys are now really, I'd say, very far away from the Alan Mulally vision of when the stock was in 2011, when the stock was at 18. The stock's at 9. The stock has no real support here. It sells at 7 times earnings. People feel that the earnings are illusory. The dividend is the most important thing, not the new Mustang. I feel like let's just say they're the weakest of the major auto companies.
Yeah. Also, warning out of Volkswagen today for 2020, and they joined Daimler and Nissan. So autos, Jim, continue to be one of the more troubled parts of the global economy.
Look, they've got a plant of 52,000 people in Puebla, Mexico, where they make their cars. And I thought it was very interesting that Bill Ford said, listen, we're making this Mustang in Mexico. And then he added the caveat that they had already planned to do it. If you can't make your cars and trucks, well, mostly your cars, in Mexico, you're not going to be competitive. And I think one story that we've been overlooking is the amount of loan going to autos that people are now underwater on. I don't want to lose track of this. It's obviously not as bad as the housing strike of 2007, which really crushed us. But we should be more focused on auto loans. They are not coming through as great as we thought they'd be.
It's going to be a busy week, as we said, Jim, for Apple, as we do expect to see Tim Cook and the president in Austin, where the new Mac Pro is going to be assembled. Not doing a whole lot today, but obviously has set a series of record highs.
Right. He'll also be speaking at Dreamforce, where I am. This is a new thing. He has not been a speaker here. The stock remains the leader in this market. I don't understand how this Tim Cook is remarkable. He seems to have the support of both the Chinese and the president. It's a special relationship with both sides, and I think that a lot of the bears said it couldn't be pulled off. Hats off to Tim Cook that he's been able to be in the middle and seem to be liked by everybody. It's really incredible.
Guys, time to do one of the big M&A pieces of news. Really came out yesterday. Not really. It did. It came out yesterday. But, of course, today is the first day we get to see the stocks trading. And that is HP and, of course, Xerox. Yesterday, the board of directors unanimously rejected Xerox's proposal to acquire the company. We've reported on it, of course. $22 a share, 77% in cash, the remainder in stock. Would have had the effect of HP holders owning roughly 48% of the combined company. Xerox, for its part, saying it had the financing lined up. $22. That's where it was. They say no way at Hewlett-Packard. But they do leave the door open to a certain extent towards potential talks between the two companies. And I would note it's interesting that we have not heard from Xerox. They have not put a press release out responding in some way to the rejection of their offer. They did send this letter again to John Visentin, Xerox's vice chairman and CEO, in which they questioned some of the basics of Xerox's business in terms of a decline in its revenues from $10.2 billion to $9.2 billion on a trailing 12-month basis. And this does go back to reporting that I did last week, I think it was last week, in which I'd said that Xerox had actually had talks with HP about being acquired by HP, but those talks had been cut off after HP asked for extensive diligence and time to do it. Now, there's been a lot of back and forth there in terms of what they really said or what they wanted. NDAs weren't signed at the time, but I can tell you that they certainly did do what I'm told was a fairly deep dive on synergies. Remember, Xerox has cited as much as $2 billion in cost synergies from a deal. But at this point, you've got HP leaving the door open by saying, we remain ready to engage with you to better understand your business and any value that can be created from a combination, recognizing the potential benefits of consolidation, they say as well, and whether there is value to be created through it. So the question, of course, becomes, well, what's it going to take to get these two companies in a room to sort of work out whether or not something can be signed to allow them to do due diligence on each other? Unclear at this point. The nominating window for directors on HP's board opens on Christmas, December 25th. It would close roughly a month later. Would there be a proxy fight? The presence of Carl Icahn as a significant shareholder in both companies certainly can't be overlooked. He is one who is in favor of a deal, says he would own the combined company stock, not opt for any cash, potentially under any a deal itself. But I will tell you, it does appear that there is still a fairly wide reach here. And the question is, what are the shareholders of HP going to say? What is the board going to feel in terms of its need to actually engage in some fashion to make sure that its shareholders feel it did as much work as is required here to say, hey, this is not something that we think can really work. The current price, I'm told, is not even close in terms of value. There is a belief on the HP side that the plan that they have in place in terms of cost cutting will extract a good deal of value for their shareholders. They're executing on that right now. They obviously are having a change in leadership at the company in terms of the CEO with the unexpected departure of Dion Weisler. But they are open to that idea of consolidation. They do, however, want to understand that decline in Xerox's business. And there is this idea, I think, at least among some in the HP camp, that there's a sense of desperation on the part of Xerox to try to get something done. Obviously, Xerox would say just the opposite. And in fact, it's simply the fact that they move faster than HP, the bureaucratic HP, which needs forever to sort of take a look at things and make decisions. They move faster. Their leadership team is the one that can deliver on those $2 billion in cost synergies, can get it done. And they argue that there's enough of an overlap in the shareholder bases that there's going to be support for them. So, Jim, Carl, we're going to see what happens here. Interesting, we haven't heard from Xerox yet. Will there be some sort of talks that lead to at least some due diligence that gets you down the road even further, Jim? I don't know at this point, but it certainly has to be thought of. Both stocks moved up on the prospect of a combination And I think both are moving down today, at least on this rejection.
You know, David, I am struck by how the language is a little conciliatory. I mean, HP is saying, look, we remain open to something. They did no longer say in their comments to me that, you know what, let's give Enrique Lores more of a chance, who's the new CEO. Instead, they're just saying, look, we could possibly do something. These aren't the right prices. They do say that Xerox is, yes, desperate because of their balance sheet. They do say that their own company is good value, but this is not scorched earth at all. I feel this is more like, okay, listen, you guys are off the mark, but the combination isn't crazy.
Yep, you're right. It definitely not scorched earth in any way, leaving that door open at least, making their own shareholder base perhaps feel better about it. Xerox, though, in a difficult position because how much higher could they really go in terms of an offer? They'd have to increase the cash position because if you throw more stock in it, you end up with HP owners owning more than 50% of the combination. Gets back to what management team would lead the company. They, of course, claim that Xerox's management team will be far better positioned to deliver on those synergies than would the, as they say, it's slow-moving HP, Jim.
Oh, these guys are all from HP, the leaders. I mean, slow-moving. Give me a break.
That's a good place to leave it.
Jim's skepticism is intact. Let's get to Rick Santelli before we get to Bob this morning. Hey, Rick.
Hey, I like to go first. Good morning. I'll tell you, if you look at interest rates this morning, the short end started to give back some ground, whereas it's mostly been the long end. It's very interesting. 30-year bonds were briefly only down a basis point. They're catching up. But the point is, as you look at this one-week chart, we're slowly melting away. We failed in the mid-190s. It looks like if you open the chart up to June, we kind of have an upward sloping channel. Maybe it's even a wedge. But one thing that seems for sure, no matter what tenure you insert in that June 1st time frame, it basically looks the same. Tired, running out of gas a bit. But here's the fly in the ointment. Zoom it back to the year 2000. There's very little doubt what you're looking at is a significant, historic, long-term bottom. But that bottom takes you in the mid-130s. We're hovering at 180. We could still melt away a lot of basis points, and that's what makes this area tricky. One thing that isn't tricky, the polls, Boris Johnson, the commitment that maybe many of those MPs are going to vote for Brexit if his horsepower holds up in the December elections. Well, the pound is certainly in favor of that as you look at the one-week chart. And if you open it up to May, it is really on the brink of overtaking 130. Breakout material would be the best level against the greenback since May. Carl, David, Jim, back to you.
All right, Rick, thanks. Rick Santelli, let's get to Bob, see what's moving on the floor. Good morning, Bob.
Well, we were up earlier on, but there were small constructive talks over the weekend. But look at the S&P futures. Eunice Noon, our reporter over there, saying outlook kind of pessimistic over there. Trump apparently not wanting to roll back any of those tariffs. The Chinese want that. Market moved down on that. And you can see, of course, trade, the nominal mover of the market these days. But don't kid yourself. The usual names here, energy, materials, industrials, banks week. The big move up, down last week rather in yields was a major problem for the banks. Down again today. Again, that moved down on the trade talks. Utilities fractionally on the upside. But don't kid yourself. We're still essentially at new highs. Here's the Friday numbers that we were looking at here. New highs on the S&P 500. Mid cap is just below new highs. Small cap, even Europe, just below new highs here. It's a very, very broad rally. And if you want to see how broad it is, just take a look at some of the sectors at new highs. How often do you see value and growth hitting new 52-week highs at the same time? There's growth and value is also hitting a new high as well. Tech and healthcare also hitting new highs. Very rare to see value and growth at the same time. Remember, value essentially banks, Walmart, and Apple. Growth is essentially your Amazon and your Microsoft here. So moving the markets are trade wars as well as the Fed here. A hope for a resolution, but you see that moves up and down on a daily basis. The big thing, I think, more importantly, is the belief that global growth may be bottoming for 2020 and not as bad as people thought even a few months ago. We're also seeing outflows from bond funds and some inflows into stock funds. People have been waiting for this for a long time. That may help the overall markets here. Are earnings bottoming at all? We don't quite know, but the important thing is we're going to be flat for 2020. And if this number holds flat for 2019, if that holds for 2020, the market is definitely going to move a little bit higher because a lot of people feel we're going to essentially be flat in 2020. So there's the nominal mover here. If you can bottom on global growth, we got a chance for mid-single digit growth in earnings. And Carl, that's always ultimately the mover of the markets. Back to you.
All right, Bob, thanks. When we come back, investors in Snap have certainly had reasons to smile this year. Stocks up 160% for the year to date. And an exclusive with Evan Spiegel's coming up this morning. Dow's down 19.
The Bond Report.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday Night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
New York Times with a statement to CNBC regarding their dispute with FedEx. FedEx's colorful response does not actually challenge a single fact in our story. We are confident in the accuracy of our reporting. Meantime, Dow awfully flat to open this busy week. We're down 4 points. Don't go away.
This 12-footer. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
For his first victory, does he have what it takes?
I'm not going to be around. I'm worried about my parents' retirement.
Oh, don't worry.
Voya helps them to and through retirement.
Dealing with today's expenses.
Like college.
While helping plan, invest, and protect for the future.
So they'll be okay. Without me?
When we knock out this wall, imagine the closet space.
Yes! Oh, hey, son.
Yeah, I think they'll be fine. Voya, helping you to and through retirement.
It was Sophie's big day. By the way, she's the next Mozart. As usual, we were behind schedule. But Sophie's enthusiasm could not be dampened. Not even by a runaway donut. We powered through it in our Toyota Prius. Because a star's gotta shine. No matter what.
It's unbelievable what you can do in the Prius. Toyota. Let's go places.
With less than 3 months until the first votes are cast, Rachel Maddow, Andrea Mitchell, Kristen Welker, and the Washington Post's Ashley Parker moderate the next Democratic debate. Wednesday at 9 p.m. on MSNBC.
This is a commercial for Warby Parker glasses. Now that's out of the way, let's enjoy the mixing of these acetate chips, which will one day turn into a pair of our tortoise glasses. Ah, try 5 pairs for free at warbyparker.com.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Jim, what's on Mad tonight?
All right, big show. We've got Twitter, Airbnb, Levi's, and Zendesk. I like to throw a lot at people when I'm out here. Brian Chesky, David, holy cow. Yeah. I mean, come on, what a booking. Man. Say it. Just say it.
Wow. This is all amazing. By the way, don't forget to ask Chip Bergerbet HP. He's the lead director, right?
Yes. You know, you have no keen eye for the obvious. You have a keen eye for looking around the corner.
Great. Amazing guests all week. I know you have, Jim. Incredible.
Thank you. Yeah. Well, we like to come out here and just not twiddle our thumbs.
And he does it all without any sleep, Carl.
Apparently not.
0.
Yeah. Jim, we'll see you all week long. Mad Money, 6 p.m. out west. We'll see you tonight when we come back, an exclusive with Snap's Evan Spiegel. Don't go away.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Elsa, the past is not what it seems. You must find the truth.
Journey into the unknown with Disney's Frozen 2, the most anticipated musical movie event of the year.
We do this together, okay?
This November.
I believe in you, Elsa, more than anyone or anything. Into the air.
Change is in the air. Frozen 2. In cinemas November 22nd.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Mongo blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Monday morning, welcome back to Squawk on the Street. I'm Carl Quintanilla with David Faber and Contessa Brewer, who's in for Sarah Eisen at Post 9 of the New York Stock Exchange. A relatively muted open to a very busy week as the market continues to get buffeted by headlines regarding trade, violence in Hong Kong, and now some economic data. Let's get to Diana Olick.
Carl, home builder sentiment in November down 1 point to 70. That's slightly below expectations. The street was looking for flat at 71, but anything above 50 is considered positive data. At 1 year ago, the sentiment survey stood at 60, so much better thanks to much lower mortgage rates. Of the index's three components, current sales conditions fell 2 points to 76, buyer traffic fell 1 point to 53, and sales expectations over the next 6 months rose 1 point to 77. The chief economist for the NAHB said builders are still grappling with affordability headwinds and, of course, trouble with a lack of labor. Regionally, over the last 3 months, the sentiment was highest in the West and the South, lowest in the Midwest. Contessa?
All right, Diana, thank you for that. Our roadmap begins with stocks struggling for direction. Reports of trade deal pessimism in Beijing pausing the record run for Wall Street.
The New York Times firing back at FedEx founder Fred Smith, standing by its tax expose. Smith challenging the publisher to a debate.
And coming up, don't miss a CNBC exclusive with the CEO of Snap, Evan Spiegel. Shares, by the way, more than doubling this year.
Meantime, markets are in the midst of this record run. Our Mike Santoli joins us with a look at some of the undisrupted champions of Wall Street and whether they can continue their climb higher.
That's what I'm calling it. Just a little bit of stock market taxonomy, trying to bundle together some of these stocks that the market has really fallen in a new way in love with. Take a look at a 1 year chart of Walt Disney, Walmart, Nike, and Starbucks against the S&P 500. There's a really interesting kind of synchronicity here. They're all up between, 22 and 26%, well outperforming the S&P 500. Their valuations have also gone to a similar zone of a premium to the market between, let's say, 25 and 29 times forward earnings. And I think what maybe unifies these stories, last week's news on Disney and also Walmart's earnings crystallized this a bit, is the market has decided that these companies once faced the threat of pretty serious disruption. They decided to disrupt themselves, to own the consumer relationships, to essentially, go digital in their own ways. Now, Starbucks was never quite facing an outside threat as much, but the fact that they have one of the biggest electric payment mobile apps in the world shows you they belong in here. What's interesting is these rich valuations are combined with relatively modest earnings growth. So the market is saying, we get it. For the long term, they're going to be winners. They're also mega cap companies that can pay out dividends and share buybacks. I think the big question is, does the market have this right? Are they paying up a little bit too much, giving them too much credit for success in a hurry? You saw the way Walmart kind of peaked and traded lower after those really good numbers, and then Disney has come off the boil a little bit after the pop on the announcement that they signed up 10 million new subscribers to Disney Plus.
All right, Mike, that sets us up nicely for a broader discussion. For more, we're joined by Matt Miskin, John Hancock, Investment Management Co-Chief Investment Strategist, and Jeffrey Kleintop, Charles Schwab, Chief Global Investment Strategist. Guys, happy Monday. Good to see you. Matt, where are you on what the market's getting right here, specifically going into year end?
We still like quality as a factor, so high return on equity, good margins, low debt to equity as a way of filtering through those stocks. Some of those stocks definitely pop up for us in those themes, but we do look at, over the weekend, there were so many bears that were taken out and killed. So much sentiment shift, and we do not want bear extinction. We want to keep some bears out there for cautious view on the market, and that is starting to slip. Sentiment is not the asset it was just a couple weeks ago for this market.
Mike, I'm sorry, Jeffrey, different names impromptu. Jeffrey, over the weekend, a bunch of macro desks are throwing in small towels. A lot of them are centered around Fed purchases of securities. How much does that matter?
I don't know that it matters all that much right now. I think we've actually seen maybe a start of a shift to fiscal policy We got, I think it was last week, maybe it was the week before, we got the 2020 budgets from many of the Eurozone members. They all included a little fiscal expansion. Not a lot, about a third of a point of GDP, but that's enough for a country like Germany to keep them out of recession. Remember how close they are with third quarter GDP just at 1/10 of a percentage point. So I think that shift to fiscal is important and something to keep a close eye on as we get a lot of data this week on manufacturing and the consumer.
Matt, let's talk a little bit about international, because we have seen a lot of enthusiasm for the growth that's happening around the world. And yet we've got the WTO saying that the trade flows are weak. We got some news from China that doesn't indicate that things are as good as they seemed. Where do you stand on international?
We still prefer the U.S. over international. And I never thought that I would see the day where missing a technical recession by 10 basis points in Germany would mean that the DAX would be at all-time highs. The disconnect between the fundamentals and the markets to us is getting a bit extreme. You're seeing multiple expansion there. We want to see earnings revisions recover. We want to see the PMIs continue their consecutive ascent higher. The PMIs this week are huge. We get the preliminary data. Those are great inputs, and we're going to be watching that closely.
And Jeff, when you're looking at international, you talk in your note about the role of fiscal stimulus here.
Yeah, this is important. Fiscal stimulus has turned, and what we're starting to see is a little bit better momentum on the profit side in Europe. One thing that's interesting is that yield curve inversions in the past have signaled a shift between U.S. and international geographic relative performance, if you will. And the recent yield curve inversion has also seemed to have brought this about, meaning that international markets have been outperforming in recent months, coming off of these very low valuations that they've sustained, that they've seen given the challenges they face. So I think we might be seeing a longer-term shift here in favor of international and value equities, something we haven't seen in 10 years.
Mike, what do you think about this idea that you want the bears around?
You definitely do. I think the question is whether we're now just in that process of people starting to feel better and optimism building before we get to an extreme or not. I think interesting, the idea that we're at about a 2% economy and the world is going to go back to maybe growing near trend, that comes as a relief when the markets are down 6% from a high like they were in August and people are worried about a recession. If we get the markets and sentiment to a point where everyone's looking for bigger things and better things and the S&P's up another 5 or so percent, then 2% in the U.S. and trend growth outside is going to seem disappointing. So nothing much has to change with the world. It has to change with prices and the move.
Well, what's it going to feel like when if you listen to Atlanta or New York Fed, and we get a 4/10 Q4, and the Fed says we're still on hold, right? Yeah. Or is there the possibility of a January freakout?
Well, I mean, not QE. So the expansion of the balance sheet that's going on right now. We've had $300 billion in 3 months with 3 rate cuts. That should be lifting financial assets. So it's doing its job. Does the consumer come in Q4? Does the holiday season deliver? Those are the things we're watching. For now, we're not overly optimistic. We're staying with high-quality companies, good cash flow at John Hancock Investment Management, infrastructure as a side play on that, as a defensive idea, and then moving up in quality on fixed income is late-cycle things to still look at here.
I mean, I think the market is telling you it's a trough, whether it's 0.5% in the fourth quarter or not. The clear message has been we've hit an inflection point. That would be a big head fake if, in fact, it turned out that it really wasn't.
Well, so how important, Jeffrey, is a trade deal here in order to get over that next hump?
It is really important. Obviously, that is what's driven a lot of this slowdown. But, you know, one of the things I'm focused on, 10 years ago, we were looking for a turn in housing to mark the low. We're now looking for a turn in autos. The weakness in manufacturing is concentrated in auto production. Ex-autos, manufacturing is up in the U.S., it's up in China, it's up in Europe. But including autos, it's down. That's critical. You don't see a turnaround in auto manufacturing until you see a turn in sales for autos. That's why you got to watch those numbers very closely. That'll tell you whether this is a bottom or not.
Well, we'll see if we get more sales and whether it's dependent on more financing, which continues to make its way to page 1 of the Journal in last week's case, right? Are you worried about? I mean, our delinquencies, consumer balance sheet, I assume the concerns are not acute.
It's not bad now, but the flood of liquidity is helping that situation. And if that flood does come back out, then that situation gets bad real fast. So you have to watch what the Fed's doing. And the Fed, for now, is providing that injection of liquidity. China just did before, open here, injected liquidity. That is helping financial assets. It's helping the consumer. But is that enough? There's so many waves of this you can do, so many refinancings that you can do before you start losing the benefit of it.
Guys, thanks. Good stuff. Matt, Mike, and Jeff.
When we come back, we're going to hear from Snap CEO Evan Spiegel. It's a CNBC exclusive. Of course, the shares have more than doubled this year. A lot more squawk on the street when we return.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. We dropped off our Christmas shopping at the hotel. Then it was off to be spellbound at the Theatre Royal Bath. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
When Harlequins take on Leicester Tigers, it's always a big game. But this year, it's the big game. Hosted at Twickenham, you can expect fireworks on the field and off it. Pre-kick-off, enjoy music, entertainment and a truly incredible atmosphere. Then watch two Gallagher Premiership rugby giants go head-to-head. Tickets from just £17 children, £27 adults. Go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
Welcome back. Let's get out to Julia Borson at Snap headquarters alongside a very special guest this morning. Hi, Julia.
Hi, Contessa. Thanks so much. I'm joined now by Evan Spiegel, the CEO of Snap, in a rare exclusive interview. Evan, thanks so much for talking to us this morning from your offices.
Oh, of course. I've really been looking forward to it.
We really appreciate it. Now, I want to talk about your earnings. 4 weeks ago, you reported accelerating user growth, 7 million additional daily active users. But Snap is still so tiny compared to Instagram, which has 500 million daily active users. Does Snap have any chance of catching up?
Well, there's certainly a lot of headroom, and I think some of the early indicators, for example, in the United States, that we reach more 13 to 34-year-olds than Facebook or Instagram, I think give us a lot of confidence that we can achieve really broad reach, around the world.
But what about this competition with Instagram, though? Do you have to catch up to Instagram to succeed?
Well, I think if we look at the broad opportunity, Snap is really about real friends connecting, having conversations with one another, and we think everyone is going to enjoy visual communication with Snapchat. So it's less about competing with Instagram, more about providing the value of Snapchat to as many people as possible around the world.
So your stock is up dramatically this year, but it is still down 4% since your earnings about a month ago. You beat expectations on the top and bottom line, but it was your outlook that seemed to raise concerns. What is it about your outlook that you think is sparking concerns among investors?
I'm really not sure. We guided to another year-over-year acceleration in revenue growth. We're excited about the progress we're seeing growing our community. So I think, I guess if the stock's up 150-something% in the year, a couple percent here and there probably don't make much of a difference.
So your users are young people. 90% of 13 to 24-year-olds in the U.S. use Snap. Do you think that investors are such a different demographic that they are not fundamentally familiar with what Snap is really about?
Well, I think a lot of investors that we speak to have children that love the product, and so they get to enjoy the product with their kids, and oftentimes that inspires them to join. So I think it's easy to use Snapchat once you try it out, and I think over time, the company's still 8 years old or something like that. So over time, I think more and more people will understand the value that Snapchat brings to their lives.
But what's really different about Snap is its hold on those young people, 13 to 24-year-olds. How do you make sure that generation doesn't age out of using Snap?
Well, we've shared some really great retention stats in the past, and so I think if you look at users who signed up 5 years ago, for people who are still using the service at the end of that year, they retained at a 95% rate over those next 5 years. And so what we really believe is that as more and more people join the service, they find value, they love using it, that they'll stay even as they grow older. And that's why we reach actually 75+% of 13 to 34-year-olds in the U.S.
So how much of your future growth is about getting a totally different demographic, an older demographic, maybe those people's parents, those kids' parents, to use Snap?
We think a lot of that will happen organically just as our community grows up, because visual communication is such a powerful tool. I think once you transition from sending text messages back and forth, which are really impersonal, they usually convey information, to communicating visually, showing your friends how you really feel, I think it's very hard to go back to that text-based communication. So we think broadly, around the world, people are going to embrace visual communication more and more. So
To go back to my first question, which was about competing with Instagram. Instagram is, of course, owned by Facebook, and Facebook, on many different counts, has copied some of your most successful features. How do you think about competing with this behemoth?
Well, the strategy that's worked for us is just to continue innovating and leading the way and trying to really serve our community. And so I think that's why we've seen such strong growth over the past year, and we're excited about the progress that we're making.
The most recent copycat move we saw from Facebook was Instagram Threads, taking some of the most appealing parts of your communications and creating an entirely new app around it for Instagram users to communicate. What do you think of that app?
I actually haven't had a chance to try it out, but I think, if we look at the value that Snapchat provides, our investments in AR and the evolution of our product to really becoming a platform, whether that's with content or gaming, I think Snap provides a lot of value to our community, and we're going to keep focusing on that.
So you're doing a good job of not mentioning Facebook, not using the word Facebook, but can you speak sort of specifically about the challenge of you're innovating, you're creating a lot of products here at your headquarters, and then the headline comes out about Facebook launching a new app that's taking some very valuable things that you're doing and putting them in front of their 500 million daily Instagram users. How do you deal with that on a day-to-day basis here?
Well, I think for our designers, it's very inspiring because it means that the work that they do, the things that they create, get an even broader audience. And so I think if you look over the past few years, we've really been able to define a lot of the standards across mobile communication and mobile content. And so I think if you're a designer and you get to have really broad reach for something that you create, I think that's something that's really inspiring.
Inspiring, but not frustrating?
Well, I think for us, we get a lot of excitement and joy out of creating new things. And so we're much more focused on building and trying to delight our community than we are about, other things.
So do you think Facebook's behavior is anti-competitive?
Gosh. I think there are some things that they've done in the past, that could be perceived to be anti-competitive. Things like, limiting the reach of other, services on their platform, preventing people from using a snap code in their profile or something like that. And I think, services that have, reach as broad as Facebook are held to a different standard, obviously. So I think, we'll sort of see what happens over time.
Are they continuing to do those things?
It's hard for me to speak to what's happening currently, but I think the government's obviously quite focused on that, so we'll have to learn.
Well, it's been pretty widely reported that Snap kept a dossier, codenamed Voldemort, of the different anti-competitive behavior that you were seeing Facebook do when it came to Snap, and that you've been sharing this information with the FTC as the FTC does its investigation into Facebook. What is it that you think the public and the FTC should know when they're looking at the landscape and Facebook's behavior? I'm
not actually sure that we've shared anything yet. But I think it's just important to understand, the really important role that these technology platforms play in people's lives. And I think everyone really wants to make sure that there's a fair playing field for all new competitors, all new innovators. Because I think as we've looked at the technology landscape in America, a lot of these big breakthroughs, whether it is things like stories or augmented reality, some of the products that we've created, a lot of those innovations have driven progress overall in the industry. And so I think the bottom line is that competition can be really productive because it encourages companies to change, to provide better products for the people that they serve. And so I think for us overall, we just need to make sure that small companies have a real opportunity to compete in an environment with really large technology players. And I think Snap has been maybe the success story, but there are many startups that really haven't had a chance to get off the ground because these some of these companies are so large and wield so much power.
So you were once the tiny startup. You did manage to succeed, but what do you think the remedies are to make sure that startups can compete against a Facebook?
That's not my area of expertise. So it's hard to say what the remedies would be, but I think, a lot of people are very focused on figuring that out. So I think it's, as you mentioned, probably less of a question of regulation, now more a question of implementation, and we should probably leave that to the experts.
But do you think Facebook should be broken up?
I don't know, and I really don't know what impact that would have for consumers. So I think the real question is, would Facebook being broken up contribute to more competition in the ecosystem overall, which would then benefit consumers? And to be honest, I don't know if that's the case.
Do you think it would benefit Snap?
I don't know. I think, the thing that it seems like regulators are most concerned about is the current sort of plan that Facebook has to integrate all of their services. Mm-hmm. So they want to integrate WhatsApp and Messenger and Facebook and Instagram. And I think, the question then that regulators have is if that integration happens, will regulators still have the opportunity to break them up, right? And so I think that seems to me to be the big debate, which is less, should they be broken up and more, should they be allowed to integrate? Mm-hmm. Because it'll take many years, 7-10 years. These antitrust, investigations take a really long time. So the question will be 7 years from now, the world will look totally different. I mean, Snap's only 8 years old. So we'll be twice our age. The world will look very different. And I think the question will be what remedies are available at that time in the future.
It seems like one thing that has been really important to Snap is this idea that if I take a photo on Snap with one of your signature lenses, I should be able to share it on Facebook's or Instagram's platforms without them blocking or sort of deprioritizing that post. Is that the kind of thing, though, that can even be regulated?
Again, I don't really know, and I'm not sure exactly how their service works, but I think the regulators will sort it out.
One thing that Mark Zuckerberg has talked about a lot is the need for federal privacy regulation. What do you think about privacy regulation? And there's a new California privacy law that's going to go into effect next year.
Well, when we look at successful privacy law, I think we really actually look to GDPR as an example that's really benefited consumers and still been supportive, I think, of small businesses. And I think that makes sense because in Europe, competition is sort of looked at as an end in and of itself, meaning that they want to support a competitive business environment. That's always one of the priorities they're thinking about. In the United States, when we think about competition, we think more in terms of consumer harm. Mm-hmm. And so I think what's really interesting about CCPA is that this is an example of regulation that may actually entrench larger players and make it very hard for smaller publishers. Mm-hmm. And so I think the question will be in the United States and in California, can we come up with regulation that still supports small businesses, but also, provides consumer protections? And I think we can be inspired by GDPR and the progress that's been made in Europe.
You haven't been called to testify in front of Congress as Jack Dorsey and Mark Zuckerberg have when it comes to privacy issues. Is Snap in a totally different position than they are when it comes to these privacy issues?
We architected our service very differently. Snap is really about communication and not about public social media. And so we don't confront some of the same issues that those platforms have over time. And we really, pioneered things like ephemerality, right? This idea that you would just delete people's data was at the time quite radical. People, said it was just for sexting, right? And now this idea of ephemerality is very broad-based and being widely adopted by the industry. So I think, we've really focused on how to protect consumer privacy because privacy is really key to self-expression. And so on our service, because we want to promote people's ability to express themselves freely and communicate with their friends, we want them to feel like their privacy is protected.
Where do you fall in political ads. You have Jack Dorsey saying Twitter is not going to accept political ads at all. You have Mark Zuckerberg saying we'll accept all political and issue ads, and we're not going to decide or sort of fact check them, decide what's accurate or not. Where does Snap fall?
We've tried to strike the right balance. So we subject all advertising on our platform to review, including political advertising. And I think what we've tried to do is create a place for political ads on our platform, especially because we reach so many young people and first-time voters. We want them to be able to engage in the political conversation, but we don't allow things like, misinformation to appear in that advertising.
So you fact check the political ads?
That's correct, yes.
And so how do you do that? Do you have external groups or an internal team?
We've got an internal team that works on that. So, that might be more similar to cable rather than broadcast. I'm sure you're familiar with all the political advertising regulation.
One other political issue that's come up recently is TikTok, which is owned by a Chinese company, ByteDance. A lot of questions about whether that Chinese ownership of this company that is very popular here with teens in the U.S. could be potentially dangerous or risky. What do you think about those concerns about TikTok?
I'm really not sure. And I'm not sure it's a political issue more than it's a competitive issue. I think this is a really great example of a Chinese technology company being really successful with U.S. consumers. It's one of the first times that's happened in the United States. So I think our country is sort of grappling with that because we have a free market and we encourage that sort of competition, how we want to regulate, data sharing and things like that going forward.
Are you seeing the growth of TikTok pose competition for your users? Or is TikTok stealing that demographic that you have such a hold on?
No, Snap and TikTok are so different, and we actually consider them a partner. So they're an advertising partner, they're a SnapKit partner, meaning that TikTok content gets shared through Snapchat, so people can discover it more easily. But the services are very different. Snapchat's really about communicating with your close friends, and it seems like TikTok is more of a popularity contest.
So all this, we've been talking about this competitive landscape, but in the meantime, you're trying to build a business. How different does Snap look from 5 years from now?
Wow. I think if we look back 5 years, a lot's changed for Snap. We built things like our Discover content platform, our AR platform. We just launched things like gaming. So Snap's changed radically in the past 5 years. And I think looking forward, we expect that change to accelerate now that the company has found so much traction and we continue to innovate at such a rapid pace. And I think one of the areas you'll really see us invest is around augmented reality. Snapchat opens directly into the camera. And so we see a lot of opportunities to continue expanding our augmented reality capability beyond just creative tools and effects, which is primarily the way that augmented reality is used today, into more utilities. So things like our partnership with Photomath have been really exciting because you can use a Snapchat camera to solve math problems. You just press and hold on a math problem, and Photomath can help you solve it. And so that's an example of AR expanding into these utility use cases that I think are very exciting.
What about maps? You've talked about maps, but it's unclear to me how this is going to really be a key part of your growth. And we know about Google Maps. Google had made such a big investment there with Waze, but what is this going to mean for you in your advertising business?
We see a huge amount of opportunity around maps, and still very early. But the fundamental thesis is that maps should be personalized. So if you open up maps on your phone today, whether they're Google Maps or Apple Maps, we all have the same map, despite the fact that we have different friends, we live in different places, we go visit different restaurants or movie theaters. And so Snap Maps is really architected around this idea that in the future, maps are going to be much more personal. And we started with your friends. So, you can see what your friends are up to. It makes it easy to meet up. You can also see events happening around the world through the snaps that are posted. And so I think Snap Map is just the beginning of maps becoming much more personal over time.
But right now, the vast majority of your advertising is through the Discover platform and the professional content that you have, for people to watch that's sort of integrated with ads. How much of an ad business could grow around maps, and how quickly will that become something that could be as big as Discover?
There's a huge opportunity in local advertising, but we're much more focused today on just building that engagement and building the core product around maps, and then over time we'll think more about advertising.
You've also talked a lot about augmented reality and specifically of these spectacles. You've introduced various versions of these glasses. There are AR glasses. They still haven't tipped to the mainstream. What's it going to take for your spectacles to be something that you see all around the place, not just as sort of a novelty item?
Well, I think it's going to take time and a lot of technical innovation to get to ubiquity with spectacles. I think if you look at the journey that hardware cameras went on over the past, let's call it 100 years, I think spectacles may follow a similar trajectory. So if you think back in time, people got their photo taken maybe once a year, right? And then, as cameras became a little more portable, they would bring them out for special occasions, like a birthday or something like that. Now with Snapchat, people use their camera all day, every day. And so spectacles are still really an event-based product. If you go on a really cool vacation, you're playing with your kids, you want to capture this really amazing 3D immersive content, you'll wear spectacles, but you're not wearing them all day, every day. So I think, maybe 10 years from now, we'll get to a place where some of the key innovations around the display, for example, battery technology, even processing, will allow us to create a product that could be worn all day, every day.
But do you think that spectacles are going to be something for consuming content, or is it going to be for creating content, for taking photos?
I would take it a step further, and say that spectacles will really be about experiencing the world. So I think that's more if you look at the broader evolution of computing, the first, desktop computers were really about information retrieval, right? Over time, as mobile came along, computing really became primarily about communication. So a huge amount of internet traffic today is really about communication. And going forward, we believe computing will really be about experience. So computing is going to be overlaid on the world around you.
So Apple just discussed that they're going to be doing a big investment in AR. They'll have an AR headset in 2022, AR glasses by 2023. It sounds like what they're doing is a little bit like your spectacles. Is this another tech giant coming in and going to steal your fire here?
I'm not sure what Apple's strategy will be, but to date, we've been really great partners with them on augmented reality. They're doing really advanced things with their ML hardware, their chipsets, that allow us to run very sophisticated augmented reality lenses on their devices. So I think, we've seen that their investments in hardware and furthering augmented reality have really helped our business, and, we hope that will continue.
But they've said that these glasses that they're working on could eventually replace phones. Is that similar to what you're doing, or is it complementary? Is Apple going in a very different direction than your spectacles, or is it competition?
Well, I think it's unlikely that these glasses are going to replace phones in the same way that people still use desktop computers, they use their laptops, things like that. So I do think they'll be supplementary to those other computing experiences. And I hope that we'll continue to partner well with Apple in the future.
Great. Well, fascinating space to watch. Lots of things going on between Maps and AR. Evan Spiegel, we really appreciate you taking the time to talk to us this morning.
Thank you.
Guys, back over to you.
All right, Julia, interesting conversation, almost a microcosm of what we know about Evan, and that is he's into innovation, the camera first, not relying on network effects, but don't ask too much about whether or not Facebook should be broken up.
Yeah, Julia hit all of the key points. I thought it was really interesting. Worth noting, the stock price did move up during the course of the interview as well. Snap shares up almost 4%. Didn't really want to, as you said, Carl, take the necessarily answer with long, detailed answers when it comes to the Facebook antitrust question. But talking about 5 years out and the innovation that's coming still to the platform, I remember, right, camera first, that's what we were hearing when they were about to go public. We're a camera company, what AR is going to mean for them in the future beyond just these spectacles that haven't that much traction.
But, Julie raises good points that when they are innovating on these fronts, then they're seeing their big competitors getting in there and taking what appeals to lots of generations, not just to the kids who are communicating privately on Snapchat, but, Gen Xers getting on there and using the filters, and the next thing you know, Instagram and Facebook are offering it too. And he didn't want to tackle that either. She was really pressing him on what the competition means for his outlook and his bottom line moving forward, and he's just staying away from it. But I'm sure that's what investors want to hear about.
You're right. All right. We will send it over to Rahel Solomon now. From this desk to hers for a CNBC News update. Rahel.
Hi, David. Good morning. And here is your CNBC News update at this hour. Hong Kong police charged at protesters using tear gas to try to stop them heading to a university where hundreds are trapped by a police cordon. China warning that no one should underestimate their determination to safeguard the country's sovereignty and Hong Kong's stability. At least one person is dead after a suspension bridge collapsed in southern France. Authorities are now looking for survivors, including the driver of a truck, which authorities believe was on that bridge when it collapsed. And 4 people are dead, 6 others injured after a shooting at a family gathering in Fresno. So this happened Sunday evening in the backyard of a home where people were watching a football game. Police say someone snuck in and opened fire before taking off on foot. And staying in California now, thousands gathered in Santa Clarita to remember and reflect on last week's shooting at Saugus High School. Family members, students, and school officials spoke to the crowd at City Park. That high school will remain closed until December 2nd. And that is our CNBC News update for this hour. Contessa, I will send it back to you.
Rahel, thank you. When we come back, Fred Smith versus the New York Times. The Times responding to FedEx founder Fred Smith, standing by its tax expose. We'll discuss when Squawk on the Street returns.
This is the investing book.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Coffee shop, cashback, cat flaps, cashback, beanbags, rucksack, hire car, buy a car, flapjack, cashback, dumbbells, cashback, takeaway, holiday to anywhere the sun is at, bum bag, laptop, big match, hatchback, binge watching, paintballing, crab fishing, cashback, anything you want to buy, everywhere you want to go. Guess what? Cashback. Whatever you spend your money on, get money back every time with the American Express Platinum Cashback Everyday Credit Card. Search Amex Cashback. Representative 22.9% APR variable. Minimum annual spend to receive cashback. Terms apply. 18 plus subject to approval.
Going, gone. Some things just don't hang around. Like a great deal in Tesco Mobile's best ever Black Friday event. Right now you can get the Samsung Galaxy S10 for just $29.99 a month. But this deal ends Sunday 1st of December. Catch it before it's gone. Tesco Mobile's best ever Black Friday event. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £35.99, now £29.99. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
This is the sound of festive fun in London. You want to keep your savings for the things you love this Christmas, not a new boiler. We're with you. So our boilers come with 2 years interest-free credit to keep your savings for a Merry Christmas. You'll get a 5-year British Gas warranty, and now we can quote by video call evenings or weekends. Get a quote by the 30th of November and get £150 off a new boiler, or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
As we go to break, take a look at the markets this morning on this Monday. Dow did hit a fresh record earlier today. Currently down some 23 points. We're hanging on to 31.14. Back in a minute.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen now to 30 for 30 Podcasts on TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off the Carson, slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday Night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lofts one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Market enjoying a relatively quiet Monday, despite all the news that's heading our way later in the week, including some October and retail earnings, flash PMIs later in the week, Fed minutes, ECB, Lagarde gives a speech, so our eyes will be peeled for all of that. We are getting word, though, from the time being, from the Fed, that at the president's invitation, Chair Powell met with the president and Mnuchin this morning at the White House to discuss the economy, growth, employment, and inflation. For more on that, we'll go to Eamon Javers. Eamon?
Yeah, Carl, this was a meeting that was not on the president's official schedule today that was released publicly, and we're being informed of it from the Federal Reserve, not by the White House. The White House has not said anything about this meeting yet. According to the Fed statement, they're saying Chair Powell's comments were consistent with remarks at his congressional hearings last week. He did not discuss his expectations for monetary policy, except to stress that the path of policy will depend entirely on incoming information that bears on the outlook for the economy. The Fed going on to say, finally, Chair Powell said that he and his colleagues on the Federal Open Market Committee will set monetary policy as required by law to support maximum employment and stable prices, and will make those decisions based solely on careful, objective, and non-political analysis. So a relatively strong statement there in Fed terms about non-political analysis. Clearly, everyone watching this network knows that the president has been on a campaign publicly to push the Federal Reserve to lower interest rates or even go to negative interest rates. Clearly, there was a meeting here between the two gentlemen at the White House that was not disclosed in advance, and the Fed putting down a marker here suggesting that it is not going to behave in a political way and is going to use its own judgment in terms of what to do about interest rates. So an interesting meeting here, and we're going to try to find out a little bit more about it and see what the White House can tell us from their perspective, Carl.
All right, Eamon, I will take it, and we're going to explore a bit more of this as well. Thank you, Eamon Javers. Joining us now, former Council of Economic Advisors Chair Austin Goolsbee, also AEI's economic policy analyst and CNBC contributor Jim Petticoukis. Austin, given your experience, of course, is on the Council of Economic Advisors, just give us some perspective here. How often or how typical is it for the Fed chair to meet with the president, and then your thoughts on what perhaps was discussed in that meeting?
You know, pretty not typical. I wonder if Chairman Powell is asking himself the question, why did the president ask him to investigate the finances of Vice President Biden, or, you know, whatever else might have come up at that lunch? I think there are going to be a lot of people who that really raises an eyebrow. Now, it's not unheard of for a president to meet with the head of the Fed. It is unheard of for the president to secretly meet with the head of the Fed after publicly declaring them to be a dope, to be an enemy of the state equal to the head of China, and to constantly harangue them that you want them to reduce interest rates and send the U.S. into negative interest rates. So if the president is calling Chairman Powell to a meeting in the White House in which he tells him, here's what the economy is as I see it, and I want you to lower the interest rate, that's totally inappropriate.
Right. Well, we don't know that, Jimmy. We don't really know what went on. We did, again, as Austin as Eamon, just reported, this was not on the official calendar. The statement we got is from the Fed itself, and of course reaffirming the fact that it's not going to be decision-making, is not going to involve politics. Give me your take.
Yeah, well, look at the situation we have. We have an economy which is slowing. There are plenty of forecasters out there thinking that the fourth quarter, the GDP number is going to begin with a 1. That's going to come out in January. And at the same time, you have a Fed chairman saying, we seem to be on hold. The economy seems to be basically growing at potential. So that is, I think, a very volatile mix. Eamon talked about the president's campaign against the Fed. That campaign is going to accelerate if we indeed start getting a GDP number that begins with 1 and the Fed stays put. I'm not sure what else the president's going to do other than tweet a lot, but he certainly will be tweeting a lot more. And I imagine a lot more attacks on the Fed. Saying that they're a worse enemy than China, that's pretty severe, and we'll see how more severe it can get.
Yeah, well, there is this relationship, it seems as well, Jimmy, between the progress of trade talks with China and how hard the president may be pushing on rates. And, of course, that's got to be a part of what the Fed is thinking about. This morning we get our reporting from our own Eunice Yoon. Government officials in China seem to be pushing back on the idea that there's been great progress made. They may sit back and wait. If you're the president and you think perhaps things are going to continue to be in a bad place with China, do you want lower rates?
Listen, the president's made very clear that he believes the Federal Reserve should be the White House's partner in this trade war against China. And that means doing whatever they have to do, quantitative easing, to boost the American economy, to give the American economy, give the president the upper hand in these negotiations. So far, the Fed has not been willing to publicly be a partner with the president, though it will react depending on how the trade war affects the economy. The president wants something a lot more tightly synchronized than that.
I want to bring in Steve Leisman, of course, our chief economics reporter who knows a thing or two about the Fed. Steve, what do you know, or what can you tell us this morning about this meeting that we're just learning about?
It's something that's done, I think, as you already reported, regularly is probably too strong a statement, but from time to time, presidents do meet with Federal Reserve officials. Of course, they don't do so with the kind of existing antagonism that exists between perhaps this is part of a process you can imagine whereby they're trying to cool the temperature. On what I guess that was Jimmy who was talking before was saying, I don't think that Powell is going to be dragged into this trade war. This notion out there that the Federal Reserve should adjust interest rates to adjust the currency is something that the Fed specifically believes is not part of its brief. In fact, if you talk to Fed officials, they'll tell you it is the province of the Treasury Secretary and the President to adjust the currency, not the Federal Reserve. So I don't know that the President tried to do that. It would not be out of character for him to do that, but my guess is he met a brick wall on that from Powell.
Austin, what should we be looking for now? I mean, I assume at some point we're going to learn more about what may or may not have been said during this meeting beyond just the Fed statement this morning.
Yeah, and when that controversy happens, if it does, I predict there will be no clarity, and there will be differing sides of what was said and was it appropriate or not appropriate. I think the thing everybody who's an investor should be looking at is not really the ongoing drumbeat that the president thinks the Fed should be his puppet and that he can just tell them, I want you to lower the interest rate. I think all eyes should be on business investment and the GDP. You know, as Jimmy said, the forecasts now are for the next quarter's GDP to start with a 1, and you got business investment is now lower than it was before we passed the tax cut. It's not that it's the Trump administration's fault. You're seeing a slowdown really globe-wide, especially in manufacturing. That's got to worry everybody. You know, if you're looking at the most cyclically sensitive sectors in the U.S., many of those are giving at least yellow warning lights.
Yeah. You know, Jimmy, when we originally scheduled you guys, before we got this breaking news, we thought we spent a lot of time on that New York Times story from yesterday about FedEx. There's been a lot of back and forth this morning about exactly how much in taxes FedEx has paid. But the larger takeaway from the story, and I want to get your thoughts because it relates exactly to what Austin just said, we haven't necessarily seen the investment that was anticipated, at least when we got the tax breaks for corporate America. Now, that may be a result of the trade war, but I'd love to get your take here. Has it delivered what was said it was going to deliver when it was signed into law?
Well, first thing, I mean, I would love to be able to run the scenario where we get these corporate tax cuts, but we don't get the trade war. Obviously, that didn't happen. So teasing out the impact of both is always difficult. And two, listen, the administration did Republicans and their own tax cuts no great service by selling them in sort of this weird anti-economic way that there was going to be this tax cut and there's going to be this big pool of money and some of it was going to go toward investment and some was going to go toward wages. That's really not how I think most economists thought it would work. If it would work, what it was supposed to do was lower the after-tax income, encourage more investment that way, the after-tax rate. It didn't do that yet. It still may. I mean, and if we got rid of this trade war, then maybe we see it. We would see the impact of that. But so far, yes, it's been highly disappointing.
But Jimmy,
go ahead, Steve.
I just want to point out that a lot of economists, even the majority of economists, pointed out at the beginning that the tax rate was not the wedge on investment. You cut taxes into a world of dramatic excess capacity. And there was an expectation that there would be a very minimal impact on investment. The one place there was some impact was in the intellectual property. Barry Knapp's done some nice work on that. But on the hard stuff, the goods and the equipment, there wasn't much of an expectation, and the data so far has simply just reflected that.
And look, there's a reason why this is the most unpopular tax cut in the history of American polling, and that's because it's $2 trillion, and it just did not deliver any of the things that they said it was going to deliver. So I think it's going to be very controversial.
When you're looking at the reaction to this, and you see Elizabeth Warren raising now her proposed wealth tax to a point where you could have people giving all of their profit to the government plus some, is the overreaction on the left problematic for those who would challenge this kind of Trump take on the economy?
Yeah, maybe. I mean, the wealth taxes of 6%, 8%, like what Bernie Sanders said, where they well exceed the risk-free rate of return. I publicly said you're going to have big problems applying a tax that's that big because it exceeds 100%. So you're going to have a ton of evasion. But that said, what did the Trump administration think was going to happen if you cut taxes for big corporations and high-income people by $2 trillion, promising there will be a huge manna from heaven increase in business investment and a massive increase in wages, and you don't get it? But I mean, obviously, people are going to come back and say, pay back the money.
Yeah. Well, and as Jimmy pointed out, of course, the trade war certainly has had an impact on many of those decisions. Guys, we're going to leave it there for now, but certainly thanks for your insights on all these different issues. Steve Leisman, Austin Goolsby, Jimmy Pettikoukas, thank you.
All right, pot stocks are looking to rebound after getting crushed last week on the heels of some weak quarterly results. Frank Collin joins us now with more. Frank, what are you seeing?
Well, hey there, Contessa. Expectations, they had been high for the first year of legal recreational cannabis in Canada, but recently those stocks, well, they've been taking a hit. Big Weed is down 42% over the past year, and the Amplify Cannabis ETF lost 15% of its value just last week after four of the biggest Canadian cannabis producers reported their earnings. Tilray shares losing just about the same, while Cronos, Aurora, and Canopy have all lost more than a quarter of their value. One major issue, there just are not enough retail stores to support demand. Just for perspective, Canada and California, they have roughly the same size population, but Canada has nearly half as many dispensaries. Ontario, where more than a quarter of Canadian sales are made, has announced plans to open 50 new outlets in 2020, which would be a more than 10% increase of dispensaries overall. Another big issue, prices of cannabis flower. The wholesale prices that make up 70% of Canadian sales, they are under pressure. Both Cronos and Tilray reported their price per gram to be nearly half what it was last year. Now, some of that pressure is coming from the resilience of the black market. Legal prices have increased 5% over the past year. That's retail, while black market prices have fallen by 12%. Black market sources are now nearly half the price, and these illicit suppliers have, honestly, longer-standing supply chains and customer bases. Even with all these issues, the Canadian market is expected to more than triple in 2020 for recreational sales, largely due to potential new revenue streams, including higher-margin vaping, drinkable, and edible cannabis products. So we'll just have to see if forecasts are more realistic going forward. Back over to you.
They do seem to be getting some religion. Thanks so much, Frank. We'll watch that closely. By the way, getting a readout of sorts from the president regarding his meeting with Jay Powell. Tweets a moment ago, just finished a very good and cordial meeting at the White House with Jay Powell of the Federal Reserve. Everything was discussed, including interest rates, negative interest, low inflation, easing, dollar strength, and its effect on manufacturing, trade with China, EU, and others. Save the name calling for another time, I suppose.
Yeah, that's very cordial.
Yes.
On always. Wow. Okay.
And he's been active today on Twitter, even suggesting that he might testify in the impeachment hearings. So this is just the latest of a series of tweets.
Missed
today.
that.
Yes.
That would be must-see TV.
Yes.
All right. Speaking of must-see TV, let's send it over to John Fort now. Look at what's coming up on Squawk Alley. John.
Yeah, it's easy. You can just keep it right here. David, coming up, Peter Adderton, the founder of Boost Mobile, is going to join us. Talk about the latest in the wireless market and his plans. That's on Squawk Alley.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
Hey there, if you've got a flawlessly powdered nose for a bargain, there's 15% off fragrance and premium beauty at Boots, including Clarins Double Serum, which was £78, now £66.30. So gift like you get them at the What to Buy Someone Worth Pushing the Boat Out for, but not too far boutique. Offer ends 17th of November at selected stores and 18th of November at Boots.com.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores, excludes an eye.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Welcome back to Squawk on the Street. I'm Dominic Chu. Markets are taking a bit of a breather after record highs hit last week. Sectors considered less economically sensitive or more defensive, like utilities, real estate, and consumer staples, are outperforming. Now, for the utilities specifically, they've been underperforming for the better part of the last month or so. But the SPDR Utilities Exchange Traded Fund, the ticker XLU, is working right now on a 5-day winning streak. Among the sector standouts today, you've got shares of Eversource Energy, also American Electric Power, Xcel Energy, and NextEra Energy as well. Now, utilities and other stocks with higher dividend yields will be a focus as benchmark interest rates have actually pulled back from their recent highs. Watch those 10-year note yields. Now, I will send it back downtown to you guys at the New York Stock Exchange, Carl.
All right, Don, thanks. When we return, Disney channeling the Force. We're going to check in with Recode's Kara Swisher, talk about Disney Plus when Squawk Alley starts in a few minutes.
There are plenty of parties over the festive period. They'll have food and drink, music too. Some will even have rides and fireworks. But one has all that. plus a big something extra. Big Game 12 is London's biggest rugby party. To watch Harlequins take on Leicester Tigers from just £17 a ticket for children and £27 for adults, go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores exclusion.
Good morning. It is 8 a.m. at Snap headquarters in Santa Monica, California. It's 11 a.m. on Wall Street, and Squawk Alley is live. Good Monday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Interesting Monday morning. We are getting some news a few moments ago that the president met with Jay Powell earlier today. He tweeted about that, got a statement from the Fed as well, as the market does tend to struggle a bit this morning for some direction. Joining us to talk about all of that, Michael Purvis, Tallback and Capital Advisors founder and CEO, and Jim Paulson, Chief Investment Strategist with the Leuthold Group. Morning, guys. Good to see you both. This news out of the White House, actually from the Fed first and then the White House, is interesting because what could they have to talk about? It seems like all the macro desks that have been getting more constructive are citing Fed purchases as a big reason for that.
Yeah, well, I think it's just interesting also because, you know, if you listen to any earnings call over the last 6 months, how many of them are really bellyaching about their cost of capital being, you know, not hot, not low enough? But there was some bellyaching about trade there, and and
dollar strength too. Yeah, sure.
And dollar strength, sure, right, which does flow into it. But the dollar strength has been persistent, but it hasn't been dramatic. It's not a replay of the 2015 and 16 dollar strength where it's really threw earnings off, right? I think it's been a more gradual, steady rise, which I think has allowed certainly CEOs to kind of manage that a little bit more effectively there, or at least to manage the street better on that.
You think spending confidence then returns in 2020?
Well, I think when you say spending, you're talking about corporate investing, right? That really comes back to some clarity about policy. And the problem with making that judgment that it's going to suddenly surge is that even if Trump were to get clarity on trade, we still don't know whether he's going to be president after next year, right? And so there's a huge uncertainty principle. And I think that risk premium, while I'm constructive on the markets broadly into 2020, that risk premium has yet to really get developed, and I think it will develop. You're starting to see some imprints of it right now in some asset classes.
Jim, do you agree with that, where risk premium is concerned? I mean, we're coming off of record highs for the markets right now, but so far the data's been kind of mixed. The Fed has signaled it's going to pause. I mean, it's not particularly jubilant in terms of all the different, factors that an investor could take account of.
I think that's true, Morgan. I think there's still, we don't have the same fear that we had, in August, let's say, when there was just intense recession fears. But I still think there's a lot of apprehension about things, including whether we actually get a trade deal done or not, whether the economy is going to pick up, whether profits are going to start to rise. I still think there's a fair amount of hesitation in the market. We're seeing some really decent moves in risk-on plays, whether it be bond yields rising or cyclical stocks or international stocks doing better. But I think that has a lot to do with the fact of how under-owned most portfolios were in those areas. And just a little bit of portfolio flow can make a pretty big outsized move in some of these assets.
Michael, we are at or near 52-week highs in Apple, Alphabet, Microsoft today, or at least touch them. Tell me your take on tech's impact on these market highs so far, and how much of an impact it's going to have for the rest of the year.
I've been arguing for several years now that the tech rally kind of is the rally, right? The big cap tech stocks, kind of define the path. They blaze the path forwards, particularly at periods of risk off. So if you look at the XLK, the tech ETF relative to the SPX, that price ratio has been just surging steadily higher in a pretty aggressive way. Semis, of course, are doing their part. So I think that's an important market signal there. I think, as if you're overweight tech, as I am, I think you always have to be aware that there are sort of tail risks down the road, right? We don't know what regulatory roadmap is going to look like under, President Warren or President anyone for that matter. And for that matter, the other sort of compounding feature is that at some point, consumer tech, right, the FANG stocks, they'll become, terminal market share GDP growers. Now, that's not a 2020 or 2021 thing, but at some point that will come into sharper focus. And that wonderful benefit of being, their earnings growth has been, and the quality of that earnings growth for 5 years has been fantastic. Their outperformance is justified, but that tail risk is something you have to keep an eye on.
Jim, whether it's tech or whether it's some of the risk-on sectors that you're just touching on right now, how are you positioned in this market?
I am more tilted towards the risk on. I think this thing is going to continue for a while, Morgan, and including tech. I would own some of the cyclicals, but I'd also continue to own technology as well. One comment I'd make there that I think is driving tech and will continue to do it. There's this idea that in business investment spending is pulled back. All of that is what I would call old era investment. It's industrial, transportation, manufacturing. The new era parts, the two parts in investment that's new era, information processing and intellectual property product spending has been accelerating in the last couple of years, and it continues to grow relative to overall investment. It is now the biggest part of total investment in the United States for the first time ever. It's more than 54% of total real investment in this country. That ratio of new era investment spending relative to overall investment lines up almost perfectly with the relative price performance of technology stocks. And it continues to grow, and I think that means that technology stocks are going to continue to outperform. What I would do with tech is move away from the popular large cap tech names, and from here on in, stay with tech, but do it in the small S&P 600 tech names, what I would call the mini fangs that are unloved, under-owned, better relative values, and yet they grow just as fast as the large cap tech names.
That's interesting. I know it's been a long-standing thesis of yours, Jim. We continue to see CIO surveys that suggest spending on software is at risk, but market's looking right past it. Maybe we'll get more color out of Dreamforce this week, West.
Yeah, look, I think the C-suite mindset for several years now has been one of solving for sustainable capital structures, because the nominal GDP environment is just, it's just not what it used to be, right? You don't have that acceleration there. That's part of the industrial underperformance story. That's part of the European underperformance story. But having said that, if you are a CEO, if you are going to, your marginal dollar, to Jim's point,
go there first.
You're going to go where you're going to be able to really extract value, and that's going to be in technology.
Very key for a lot of the names that we talk about, especially in this hour. Thanks, guys. Good to see you.
Thank you.
Michael and Jim.
Minifang, is that a canine? Is that an incisor? I don't know. All right. Meantime, HP's board unanimously rejecting Xerox's bid to buy the company, saying the offer of $22 a share was undervaluing the company and not in the best interest of shareholders. HP, however, did make it clear it was, quote, open to exploring a possible combination with Xerox. You can see both of those stocks trading lower this morning, a little less than 1%.
Speaking of legacy tech, interesting to see how this one plays out.
Yeah.
All right. Well, just ahead, an exclusive sit-down with Snap CEO Evan Spiegel. What he told our own Julia Borston last hour, that's coming up next. Don't go anywhere.
Driverless cars.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search your 2 Christmas deals.
O2 refresh credit by Telefonica UK Limited. Contract eligibility and terms apply.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center. And
tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
It's not just streaming services that are tying up people's income. Subscriptions for clothes, food, and other conveniences has been shrinking free cash flow. Kate Rooney explains from San Francisco. Kate.
Hey, John. So subscription offers from video streaming services to clothing rentals are booming here. Experts say it's weighing on consumer savings. One fintech CEO I spoke to calls it encumbered income. So people are renting instead of owning, paying in installments, and subscribing instead of buying assets outright. More of the debt picture in a second, but first let's look at where we are in this subscription economy. According to McKinsey, roughly half of U.S. consumers have at least one subscription. 46% have an online streaming media service like Netflix. About 10% have an e-commerce or food subscription. They categorize that as a box. The options are growing with the so-called streaming wars. We've got Disney Plus, which launched last week with more than 10 million people signing up just on day one. It's also e-commerce. That market is growing by more than 100% year over year for the past 5 years. That's also according to McKinsey. And for tech companies, recurring revenue gives them a sort of predictability. One VC I spoke to said at least half of the 800 companies they're looking at every year have that revenue model. But they also are using targeted advertising. So on Instagram, for example, they're able to find consumers who might not otherwise think to subscribe. All of this could weigh on consumers' free cash flow. Part of that is debt. So excluding mortgages, this is according to Northwestern Mutual, the average person has $30,000 in personal debt, and a third of their income is already going to paying that down. Another report says that almost 85% of Americans underestimate how much they're actually paying every month in subscriptions. Financial advisors I spoke to say this all comes down to behavioral economics. So people aren't thinking of a $5 or $10 subscription as money that would otherwise go to retirement. Guys.
All right, Kate, thank you. And of course, one such service that you mentioned is Disney Plus. Our next guest writes that Disney's been trying for 2 decades to tame the internet and has finally perhaps hit the mark with this offering. Recode co-founder, New York Times columnist, and CNBC contributor Kara Swisher joins us now. Kara, happy Monday.
Happy Monday.
Great take on Disney Plus and how it follows this legacy of missing. I wonder, though, is the bar higher for Disney? I got to take kind of the cynical position here. I mean, I was buying a whole lot of Disney content, digital content, for years because my kids like Marvel movies. Now I'm not buying any of that anymore. We're subscribed to Disney Plus. Don't we have to wait and see whether this is really a win for them and see how low the churn is?
Well, people keep having children. John, for example, myself. So I don't know. I think that's not the case. And also there's a lot of other stuff. My kids were watching, I just got it through Verizon, which was a free year. I mean, the finances are another question, but I just got it because my kids love my teenagers like the Marvel movies. And I suspect my young baby will like the other movies as she grows up. But I think what's interesting, and I like a lot of the Marvel movies, and I like a lot of the other things, the original stuff they're making. And so I don't know. I think it's an interesting thing, but they can't not be here. They have to be where the customers are, and they have to sort of offering what you're talking about, these beyond the bundle. And Scott Galloway uses a term rundle, which is a recurring revenue stream, a subscription stream that isn't just content from Disney. What else would you buy from Disney? What else would you buy from Apple, from Nike, from other companies? And this idea that you have these subscription relationships like you do with Amazon and Amazon Prime is a really big idea. And so I think Disney has to be in here no matter what. And the question is, how can they make it economically viable so that it creates enormous subscription revenues over time?
Absolutely, but I guess my point is I was already buying Disney content digitally. I just wasn't buying it directly from Disney. So when we think about big picture what this means for Disney's business, don't we have to think about, they're not brand new to the digital ecosystem, but they are new to direct. And how do we measure their success there?
Well, I think it's interesting because they are making new stuff. I mean, look, The Mandalorian, which I talked about in the piece, which I still haven't watched yet, but a lot of people have, is a new product that comes off of Star Wars. Or they're making High School Musical again, which of course I'm going to watch. They're making it into a series. And so there's more to happen as they're doing it, and they can take advantage of their classics. Like, I think they're making a new Lady and the Tramp, and then they can sell the old one on this service, then they can sell the new one on this one. So it works really well together, it seems to me. And the question is, how far can they take it, and what else can they offer to people? I mean, what would you trust Disney with? Be it toys, perhaps? Would you want to buy them direct after seeing something? Games? I'm not sure. Trips? So I think it's a really interesting thing that they're doing in terms, especially the original content, though they're spending, as I said in the piece, it's very pricey what they're doing. But the fact of the matter is they've been spending, as I noted in the piece also, for 25 years, they've been spending enormous amounts of money that are going down the drain. So I'm kind of heartened by this effort because I think it's a smart one.
Kara, I think of the old entertainment, I guess, adage of every overnight success is 10 years in the making, and it would seem this overnight success is 25 years in the making. So just to dig into that a little bit further, How does Disney present a case study to some of the other media companies that are looking to also go direct to consumer with their own streaming services?
Well, Bob Iger talked about it 10 years ago to me on stage at one of the All Things Digital conferences. He's like, if someone's going to eat our digital lunch, it might as well be us. Now, before that, they had some enormous failures. The things they bought, I was remembering them because I covered them all for the Wall Street Journal and various places I've worked. But they have been at it in various ways, whether it's through investments in things like Vice, and other places, whether it's efforts. They had all kinds of websites. They had a thing called Club Penguin. My kids used it. They had another site called family.com. Then they had something called Go, which is a search engine. So they've tried everything. But to me, this is the smartest move they've made so far. And I'll tell you the case study is his persistence of Bob Iger in doing this, because a lot of other CEOs would not have kept at it. Look at News Corp, which has had a lot of failures. And they have some exposure digitally, but not as much as Disney has. And in this case, they bought the Fox assets, and now they're putting The Simpsons on this service, although there's a controversy on the ratio aspect, according to my kids, ruining all the jokes.
It's interesting you mentioned that, because we've been playing sound that Iger on our show from 2015 in which the thinking was still Netflix is a great marginal customer for us, and they send a lot of money our way.
Yeah.
When do you think the shift happened where we're going to do this on our own? Was it something about the erosion of ESPN or something else?
Well, I think it was that, oh no, that we're not controlling our distribution, and look at these big tech companies, and look what value Netflix has created using our assets. I thought it was always a cheap move by all these companies to sell stuff to Netflix like this and not do it themselves. But they were, constitutionally unable to do it. If you had visited any of those companies, the digital stuff was always off to the side and treated in a different, odd way. And I think they've made it. I mean, it's been clear that these companies needed to be very deeply into tech, even if they weren't tech companies. And it's been a slow going because they do so many other things so well. They do their parks really well. They make their movies really well. So it's very hard to focus. It's very hard to focus. So I think that they realize they need to control their own destiny and not let someone else control it.
Yeah, Kara, you say you haven't watched The Mandalorian yet. Got two words for you. Baby Yoda. You can thank me later. Meanwhile, we want to get to Cody. Investing in Kylie Jenner's makeup company, Kylie Cosmetics, taking a 51% stake for $600 million. And Kylie's team is going to continue to lead the company's creative efforts. Kara, keeping up with the Kardashians is hard. There's so many of them. They're all over the place. But this is a lot of money. I mean, $600 million. It's significant, isn't it?
It is significant. It's so funny because 5 or 7 years ago, I had Kim Kardashian on the stage at one of my events, and everyone gave me such a hard time. And I was just fascinated by the Kardashians' use of social media and parlaying it into brands. At the time, she was just doing a game, and she had made $70 million, which I thought was a lot of money, and had been using social media really deftly. And then this is another thing. Kylie built a brand here and has sold it off, a really interesting brand. I think Rihanna's doing the same thing with Fenty. These are the Kardashians, whatever you think of them, whether you think they're bad influence on girls, whatever you think of them, they are really deft at creating fantastic brands online that then translate into something real. And listen, $600 million is real money. And what's interesting is today I'm even getting really obnoxious tweets of people saying they're stupid, they're this, they're that. And I'm sort of like, I'd like to be as stupid as these people. It's fascinating the attacks they get, but I have to say they're really rather clever about how they use social media to parlay it into other things. And here's a perfect example of that.
Yeah, it's amazing to me. I mean, Rihanna, she's a singer, right?
Yeah.
And she parlayed that. The Kardashians, they've kind of had to make it out of next to nothing. Kara Swisher, always great to have you. Thanks.
Thanks a lot.
Meantime, our own Julia Borston sat down with Evan Spiegel of Snap for an exclusive in the last hour. She joins us now with some of the highlights. Hey, Julia.
Hey, Carl, that's right. Snap CEO Evan Spiegel saying they still see a huge opportunity to grow this social media platform by both expanding the demographic to which they appeal and also by continuing to innovate, particularly around augmented reality, bringing those AR tools beyond just photo filters into the arena of maps and beyond. Take a listen.
We see a lot of opportunities to continue expanding our augmented reality capability beyond just creative tools and effects, which is primarily the way that augmented reality is used today, into more utilities. So things like our partnership with Photomath have been really exciting because you can use a Snapchat camera to solve math problems. You just press and hold on a math problem, and Photomath can help you solve it. And so that's an example of AR expanding into these utility use cases that I think are very exciting.
Now, as for Facebook, including some of Snap's most valuable popular features, such as those photo filters in its apps now, Spiegel says he's not concerned or worried about that competition. But here's what he said when I asked him if he thought Facebook's behavior was anti-competitive.
I think there are some things that they've done in the past, that they could be perceived to be anti-competitive. Things like, limiting the reach of other, services on their platform, preventing people from using a snap code in their profile or something like that. And I think, services that have, reach as broad as Facebook are held to a different standard, obviously. So I think, we'll sort of see what happens over time.
When I asked if he thinks Facebook should be broken up, he says he doesn't know. He thinks it's more a question of whether Facebook should be allowed to integrate all the apps that they own. Now, I also asked him about the debate about political ads on these platforms. He said Snap is taking a different approach than either Facebook or Twitter.
We've tried to strike the right balance. So we subject all advertising on our platform to review, including political advertising. And I think what we've tried to do is create a place for political ads on our platform, especially because we reach so many young people and first-time voters. We want them to be able to engage in the political conversation, but we don't allow things like, misinformation to appear in that advertising.
So you fact-check the political ads?
That's correct, yes.
I also asked him about growing social media app TikTok. It's incredibly popular, particularly recently. I asked him if he was concerned about competition. He said Snap and TikTok are totally different, and he sees TikTok as a partner rather than a rival because they buy ads on Snap. And I also asked him about the concerns from Capitol Hill about Chinese ownership of TikTok. It is owned by ByteDance. He said that what we're really seeing now is the country grappling with the fact that this is really the first time that we've seen a social platform with Chinese ownership. Guys, back over to you.
Julia, it was a great interview. You covered a lot of ground. Shares of Snap are up 5% right now, and actually they spiked to highs of the session while you were doing this interview with Evan Spiegel. I'm wondering, as someone who sat down with him before, was there anything here that really surprised you or marked a change in philosophy for him?
Well, look, I think that, Evan Spiegel noted how young the company is. It's only about 8 years old, and he really seems to be sort of finding his voice as a leader. He seems much more comfortable talking about the competition and really trying to forge his own path as, time after time, Facebook continues to introduce new, not just integrate Snap's most popular features into their apps, but they just introduced Threads, which is really sort of picking up on Snap's popular communication. And I think what they're really trying to do is differentiate Snap. They have the professionally generated content. They're taking a different approach to political advertising. They're really trying to go their own way here.
Julia, what did you make of his response to your question about politics and TikTok? I thought it was interesting that he framed it as a competitive issue more than a political issue, seeming to suggest that really maybe the political issues around TikTok aren't as big a deal as the fact that you finally do have a Chinese consumer digital brand that's gaining traction.
Well, look, I think that he's always been very careful when he's talked about Snap's approach to privacy and data, that they're very secure, they're very private, they're not going to be selling or doing anything inappropriate with user data. And I think that's sort of at the heart of some of these concerns about TikTok. What is TikTok doing with all these videos? With, are they sending that back to China? Do the Chinese have access to that? So I think he's always been trying to be very careful about that. But I think for him, he says TikTok is very different from Snap. Maybe he's suggesting that it's posing more of a threat to Facebook or Instagram. But he's saying this is sort of a free market question. This is the first time we've had a really successful consumer brand that's owned by a Chinese company. How are we going to regulate that? How are we going to treat that differently? And is it going to be a sort of, are we going to set a new precedent here for how TikTok is treated?
Julia, thank you. Julia Borston. Still to come here on Squawk Alley, a new Ford Mustang, but as an SUV, an electric. We get a first look and hear from Ford CEO Jim Hackett. That's coming up after the break. The Dow's nudged back into positive territory. It's up 10. Stay with us.
I heard you guys have Workday now.
Yeah, they're a great partner.
Something explosive is coming to the home of rugby. When Harlequins meet Leicester Tigers, expect fireworks. With tickets from £17 children and £27 adults, Big Game 12 is more than a Gallagher Premiership rugby fixture. It's London's biggest rugby party. Enjoy music, entertainment and a truly incredible atmosphere before the big game kicks off at 4:30pm, Saturday 28th of December at Twickenham Stadium. Go to tickets.quins.co.uk or search Big Game 12.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen bites for just $1.99 and 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10pm on Friday the 15th of November to 5am on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
This is someone making an online booking at Ford.co.uk using the words Ford20 so they can service their Ford for £20 less. And this is someone who didn't get their Ford serviced. You see, at Ford, we use Ford genuine parts and Ford trained technicians. Plus, if you quote Ford20 when you book with us online, you can receive £20 off. Book now at Ford.co.uk or visit your local participating dealer. Ford service. No one knows your Ford better.
Retail customers only. At participating Ford dealers. Cannot be used with other promotions. T's and C's apply. Search Ford Service for more information.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Getting some news regarding those Huawei licenses from Commerce. Let's get to Kayla Tausche in Washington. Kayla?
Carl, we're just seeing a filing with the U.S. Department of Commerce that essentially extends the temporary licenses for U.S. suppliers to do business with Huawei from essentially today, November 18th, 2019, to February 16th, 2020. So this is simply another 90-day extension for these companies to continue doing business with Huawei while these trade talks between the U.S. and China continue. Huawei has been a linchpin for the Chinese government in these talks, even though the U.S. has maintained that it is a national security issue. But that being said, it is once again figuring into these talks with the Department of Commerce, delaying by 90 days a final decision on whether these companies can do business with Huawei as these talks continue. Carl?
Kayla, I'll take it. Thanks for bringing us the latest. Kayla Tausche in D.C. Meantime, Ford taking consumers by surprise this morning out with its latest Mustang, this time an SUV and electric. Phil LeBeau has more from Hawthorne, California. Phil.
Morgan, this is all about Ford taking its most iconic brand name, Mustang, and leveraging it to make a big splash when it comes to electric vehicles, which Ford has not been a leader in here in the United States. So what's behind the Mustang Mach-E? Here are some numbers to consider. Range, fully charged up to 300 miles when this vehicle comes out next year. If you just want a 10-minute quick charge, you'll get 47 miles, and the base starting price will be $44,000. There will be a higher-end version that will go for about $60,000, and the CEO of Ford realizes what's at stake by attaching the Mustang name to an SUV.
The heart of the company is on trial here because we have to get this right because our Mustang share performance just keeps getting better and better. We're now the #1 sports car in the world.
While the Mustang share is getting better, Ford is nowhere in the market when it comes to pure electric vehicles here in the U.S. Didn't sell a single one this year. That market pretty much dominated by Tesla. You also have GM, Nissan, and Volkswagen picking up the remainder of the 20% or so of the electric vehicles sold in this market. As you take a look at shares of Ford over the last 2 years, remember, this is a company that's transitioning in this turnaround into the revenue-generating phase of that turnaround from 2020, 2021, and 2022. A lot of that revolving around electric vehicles. I want to show you guys one other thing. As you come over here, I'm going to open up the Mustang Mach-E. I've had people ask me, well, what's the instrument cluster all about? We are in the age of the tablet, guys. That is a 15.5-inch tablet. There is also a screen behind the driver's wheel. So unlike Tesla, where you only have the screen in the middle, the tablet, you now also have one behind the steering wheel as well. Guys, this comes out at the end of next year. That's when we'll see the first Mustang Mach-E's. And again, the estimated starting price is going to be about $44,000. Throw in the $7,500 federal tax credit. It gets you down into that $36,000, $37,000 range. Guys, back to you.
Phil, is it going to have that signature Mustang vroom to it?
Well, it's electric, so it's quiet. But, this is the big debate that's in the auto industry. With software, you can add different sounds to vehicles. We really haven't seen that take off. That's more of an idea that has been pushed. I wouldn't be surprised over the next 5 or 6 years as we see more electric vehicles that you will start to hear that discussion heat up a little bit.
Yeah, I've seen it on the motorcycle side, too, with Harley Davidson and its Livewire electric bike. Phillibo, thank you.
Yeah, I guess Mustang Sally is a PTA mom now.
Wow.
Right. It's an SUV. Yeah.
You're outdoing yourself this Monday morning.
It's Monday. European markets just closing. Dom Chu has the breakdown of today's action overseas. Dom.
I have no more alphabet soup for you guys, at least in this segment. Generally more red than green, as you can see across the board when it comes to those European equities today. After a CNBC report that there may be some more pessimism about that path of U.S.-China trade talks, at least from one government source in China, citing President Trump's comments about not rolling back tariffs. A little bit of negativity there. Now, those losses were paced by underperformance in major bourses, including the German DAX and CAC in France. As you can see here, those are the big ones. Now, in the UK, traders there kept an eye on the Confederation of British Industry, or CBI conference. That's where political leaders are meeting with business leaders to talk about their respective agendas. So that's key there for the UK market. Some notable corporate stories today include Airbus. The European Aerospace Consortium is lower today after what some cited as a slow start to the Dubai International Air Show. Airbus did, though, manage to ink some larger orders, including ones from Air Arabia and Emirates Airlines. Also, Volkswagen shares finished the day in negative territory. The German automaker reduced its forecast for a measure of profits and sales growth as well. They cited less demand for passenger vehicles, so Volkswagen shares certainly a focus. And we'll end on a surging stock in Spain, where shares of stock market operator Bolsas y Mercado Españoles rose by around 38%. This after Swiss exchange company Six Group announced an all-cash bid to try to buy BME. Now, that comes on the heels of competitor Euronext saying that it was in talks to buy BME, so the battle is on for control of that Spanish bourse. Now, Carl, I will send things back over to you.
Wow, M&A in the exchange space has been crazy this year, Dom. Thank you. Dom Chu. Let's get to Rahel Solomon, get a news update this morning. Hi, Rahel.
Hi, good morning, Carl. Good morning, everyone. And here's what's happening at this hour. President Trump suggesting that he might be willing to offer written testimony in the House impeachment inquiry. He tweeted he will strongly consider an offer by House Speaker Nancy Pelosi to testify before the House impeachment panel in order to get Congress focused again. Iran has breached another limit of its nuclear deal with the West by accumulating more than 130 tons of heavy water. This in a report by the UN Nuclear Watchdog Agency. North Korean leader Kim Jong-un supervising there a parachuting drill of military sharpshooters and also vowing to build an invincible army. This comes hours after President Trump urged Kim to act quickly to get a deal done, while also hinting at another summit. North Korea has publicized 2 military drills in 3 days. And Russia says that 3 Ukrainian naval ships that were seized in a shooting confrontation nearly a year ago have been returned. 24 Ukrainian sailors were taken prisoner during the incident. They were returned home in September as part of a prisoner exchange. And you are up to date. That is our CNBC News update for this hour. Let's get back to Squawk Alley. Carl, I'll send it over to you.
Rahel, thanks. When we come back, Sprint required to divest itself of Boost Mobile as part of that merger agreement with T-Mobile. The company's original founder making a bid to buy it back. We're going to get his offer to Sprint next on Squawk Alley, as we have record highs on the Dow and now the S&P as well.
The CNBC Trend Tracker Live Data Board is brought to you by the CME Group. CME Group, where the world comes to manage risk.
It was Sophie's big day.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen Bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes NI.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
This Black Friday, get Sky Entertainment for £22 a month. Then enjoy a spectacular 50% off Sky Cinema, including Christmas movies like Mary Poppins Returns and The Grinch. Build your perfect bundle today. Choose any or all of our Sky TV packages and get an incredible 50% off. Hurry, join today. Visit sky.com. Offer ends 2nd of December. New 18-month minimum terms or 31 days notice to cancel depending on package. Discount on standard pricing with same minimum terms. Set up £25. Kit loaned at no cost.
Welcome back to Squawk Alley. Sprint's divestiture of Boost Mobile, a caveat of its pending merger with T-Mobile, which has so far cleared regulatory hurdles but faces an antitrust objection by a number of states. Our next guest has been long bidding to buy his company back, Boost Mobile, back from Sprint, and joins us now to make a formal offer. Of course, this comes as T-Mobile announces a successor to CEO John Legere this morning as well. Boost Mobile founder Peter Adderton is with us. Peter, a lot to get to today. Thanks for joining us.
Thanks for having me.
All right, so you're looking to put an offer out there again for Boost Mobile. What is it and why now?
Well, why now? Because the merger agreement that they had between T-Mobile and Sprint has not been renewed. They had an opportunity to renew it. So we think that it's game on now for everybody. And we've looked at the merger and the divestiture of Boost, and we've looked at the numbers. And if you just take other MVNOs that are out there in the marketplace, Dish is substantially underpaying for the value of Boost. And what we're willing to do today is say we are willing to pay more for Boost. We're also willing to make commitments that the Dish has not made and the FCC and DJ haven't required, which is maintaining employees, maintaining dealers, and maintaining lower prices to continue to grow those. If you look at the multiples that are being paid right now on Boost, we see it's somewhere between 3 and 4 times EBITDA, which is way below market value. We think there's $300 to $400 million, if not as high as $500 million being left on the table. So we think that Sprint has an obligation to its shareholders to maximize the value of these assets. And we think that our offer is real, and they know that it's real, that we're willing to substantially increase the offer that Dish has offered today. We're also willing to make commitments which we think will help appease the AGs, which is a lot of their concerns related to jobs, dealers, and lower prices. So we think we're ready, we're the best for it, and we're ready to make that commitment, and we're ready to sit down with Sprint and have that discussion today and give them material more. And I think that that's something that they really should be looking at right now, considering that T-Mobile and Sprint have not announced the extension of the merger.
Peter, how much are you offering for the Boost
So
Mobile
we look at it
assets?
today. We actually think that the business should be valued somewhere between 5 and 6 times EBITDA. So we think that there's probably $300 or $400 million more on the table that Sprint's leaving behind or T-Mobile's leaving behind. So we're willing to pay fair value. Just looking at the comps, I spent the last 2 years traveling the world looking at MVNOs with private equity funds, and we think that the 3 to 4 times EBITDA multiple that Dish is paying is way below market value.
Peter, how do you make an MVNO successful in this 5G transition that we're getting ready to go into while maintaining those costs like employees that you talked about?
Well, I don't think that 5G actually has any bearing on the consumers in the prepaid market in the next 3 to 4 years. Why? Because the networks
Really, 3
won't
to
be
4?
built. Yeah, well, the networks aren't going to be built, and then the handsets are going to be so expensive. I mean, we're talking about a low-income market that's jumping around from an iPhone 7 today. They haven't even got up to the latest iPhone, so it's going to have very little impact. The capacity that they talk about, the increased capacity that they're talking about, is just not going to be there for the prepaid consumer. So the best way to make an MVNO work, and the best way to make it work and continue to keep growing that business, is to focus on your customers, is to focus on the value play, is to keep your costs low. Now, if you've got an MVNO and on one side of your business you have to spend $10 billion building a 5G network, and on the other side you're trying to run a low-cost business, the two don't come together. And that's why Dish, in my opinion, isn't the best owner of this business, because they're going to need a whole new group of subs in order to cover that $10 billion network that they're building. The prepaid low-income customers and their margins on an MVNO are not going to cut it.
Peter, have you had conversations with Sprint, T-Mobile, and Dish for that matter about all of this?
So I tried 2016 to have a conversation with Sprint. We got close going down the pipe of buying Boost back, and in the past 3 or 4 weeks I have had discussions with Dish, and I'm trying to push them and push everybody else to say, let's get real here. In theory, the divestiture of Boost makes sense, but the reality is to Dish, it doesn't make sense. It practically does not work, and we're going to see that, and the consumers are going to pay the price for that. I think the state AGs have an opportunity to fix this, get it right, and allow the consumers to win, allow the employees to win, and the dealers.
Peter, you were talking about listening to the customer in the prepaid market, how 5G is going to affect the high end. It doesn't so much matter for Boost's customer. What do you think the customer is saying now in that market and is likely to be saying over the next couple of years that's different from what might be considered another type of mainstream customer?
Well, I mean, look, I don't think that at the end of the day, we keep coming back to 5G. We keep coming back to the benefits of 5G. I haven't heard one CEO of one wireless company give me what the killer app is. What is going to drive every consumer, low-income, high-income, medium-income consumers, to race out and buy 5G? And they keep talking about speeds. Well, that's just an evolution. That's not a revolution. So I'm still yet to see how that's going to work. And the other thing is pricing. I mean, the CapEx, the amount of money they're pouring into these 5G networks, you can't keep prices the same or lower. That's why it's disingenuous for us even to believe that T-Mobile is going to keep those prices low. And now that the guy who sold it all to us has jumped ship, I mean, it's ironic that the two guys who sold us the merger, John Ledger and Marcelo Clerc, have both left. They've both left the business, and they both told us that there would be job accretive, yet they've both lost their jobs. So I think at the end of the day, we've really got to look at this, take a step back and say, what are we really doing here? And are we really benefiting the customers? We have a real offer with real money and real conditions.
Peter, to that point, I mean, consumers are going to get bombarded over the next 12 months on marketing, citing the benefits of 5G. What is your advice to them? Not to buy a new phone for the next 3 to 4 years?
My advice is wait until 5G is up and running. Wait until it's out there. Wait until there's more handsets in the marketplace. Wait until the costs have come down. Because your overall experience between your 4G, or the 5G as AT&T calls it, and your 5G experience in the next 3 years is going to be zero. So why pay more?
Peter Adderton, Thank you for joining us.
Thank you.
Well, we're going to continue to watch to see whether this rally continues. Much more ahead on the record highs that we have seen in stocks next. But first, Rick Santelli, what are you watching today?
You know, there's been many calls that we are establishing all-time bottom in long-dated treasuries. But it's taken a long time. That's what we're going to talk about after the break.
Wall Street.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whiskey for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! Hand off to Carson, slithers through the crease between the guard and the center. And
tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Time for the Santelli Exchange. Let's get to Rick in Chicago.
Thanks, Carl. You know, when it comes to technical analysis, I've said this many times, it's as much art as it is science, maybe more so. But the interesting thing about technical analysis at the base of it is that human behavior tends to be repetitive. If you get certain patterns lead to certain outcomes. But that doesn't mean, of course, that real-world issues don't get in the way, whether it's tariffs or recessions. There's a lot of things that patterns aren't going to pick up. Now, having said that, the long goodbye in interest rates has one good thing in common, and that is pretty much unanimous agreement that we have most likely formed the lows. Now it's just a question of when the higher rates come. Let's go to the board. You know, this chart goes back 29 years to November 1990 to give you an idea how long 10-year note yields have been going down from over 8%. And the real issue is right here. This bottom, that bottom's around 138, July of 2012. This is July of 2016, also around 138. This was recent, August of this year at 146. So basically, we've been trying to put in a bottom for over 7 years, beginning in July of 2012. And believe me, that is a bottoming formation. Now, does that mean in the final analysis that this market can't extend and move lower? Of course not. But considering the context of this, I would say it's a pretty good bet that we are making a bottom. Now, let's take this little smidgen here and concentrate on it from July of this year to show you how much minutia lies in these little formations. We've basically turned this into a wedge. Now, you remember that August bottom at 146? Well, here it is. And even though it looked like we wanted to work higher, we sort of failed here in the mid-190s. Now, the point is this formation could extend back down here and become a little bit more of a parallel channel. But the real key is that we trade under 146 again. Many people are going to get a bit nervous over that. And if you look at all the context in the globe, consider Japanese debt to GDP approaching 240%. There are a lot of reasons to think central banks and countries and banking institutions aren't going to do their darndest with all this debt to maybe keep their foot on the scale of interest rates. I don't think anything's going to happen fast to the upside, but we do want to be cognizant of the fact that if anything occurs this year that puts us at a close that's much above 220, I would think that beginning in next year, we would do a whole lot more work in an area that's higher, but still not anywhere near levels that we've seen in the 2008 to 2010 period. Carl, Morgan, back to you.
Rick Santelli, thank you. After the break, Google's cloud gaming service, Stadia, set to debut tomorrow. Price points, the games available, and what to expect. Next, stay with us.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
You're stuck indoors, waiting for a delivery.
But you should be at the match with your mates. Get in!
You want to be home when the kids get back from school.
Hey, guys.
But you've got to work late. Again. With Ring Video Doorbell, you can do both. Featuring HD video and two-way talk, you can see, hear and speak to whoever's at your door from wherever you are, all on your phone. Available at ring.com and selected retailers.
At TUI, we can help you find the perfect family holiday. And with flights from 20 UK airports, we make getting there a whole lot easier. Book now and choose from thousands of holidays under $399 per person and spread the cost with £0 deposit when paying with direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At or protected.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off the Carson, slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Google's cloud gaming service Stadia is set to debut tomorrow, and it's announced it has nearly doubled the number of games that are going to be available to play at launch. Josh Lipton's in San Francisco with more on what to expect from Stadia. Josh.
That's right, John. So it's a date gamers have circled on their calendars, the launch of Google's new video game streaming service. It's called Stadia, and it officially launches tomorrow at noon Eastern. It's easy to understand why gamers could be excited by such technology, because it means they don't have to download or buy high-quality, complex games at a retailer. Instead, they can just stream those games to a variety of devices. Now, on launch day, there will be 22 games available, with 18 more titles on the way. today. In order to play at launch, fans did have to buy this $129 hardware bundle that included a special controller. Fans can play the games in the Chrome browser on a computer and on most Pixel phones. To play on the TV, they're going to need the Stadia controller and Google's Chromecast Ultra streaming device. Tech giants we know are finding different ways to capitalize on the video game industry, and for good reason. This is a big opportunity. The industry will generate revenues $174 billion this year, according to IDC. Google will have competition, though. Microsoft has already started testing its own video game streaming technology, too, called Project xCloud. Right now, in a limited free preview, gamers in the US, UK, and Korea can stream more than 50 titles from their Xbox console to Android phones and tablets. Microsoft says this new technology will be formally coming next year, but hasn't yet detailed price or exact launch dates. Guys, back to you.
Thanks, Josh. Pretty fascinating on a day where Alphabet did trade at an all-time high, going back to the special distribution, actually the IPO of 2004, but then distribution since then. And that's helping overall markets, which have been suppressed by skepticism over trade. We're back in 3 minutes.
Welcome to the place where at Lidl we're big on getting in the Christmas spirit with our award-winning